All right, yo, what's up for everyone on the YouTube replay? Hope you're having a great day. Let me start this off with a quick portfolio update because the market's not too happy today. Literally every stock in our Moomoo portfolio is negative. If we head over here to our Webull account, oh, here's our watch list right here. Let's see what's down the most today. I am curious. Hey, actually, the fintechs are doing great, specifically like Sezzle, Affirm, Dave. I think SoFi is even green a little bit, but let's see what's tanking on the day. I am curious. So iRobot, yeah, Amazon tried to acquire iRobot a long time ago, but it was right here. You can kind of see, yeah, it was right here. The stock kind of went flat. Amazon tried to buy iRobot, but the regulators didn't allow it, and now this company went bankrupt thanks to them not allowing that. So, oh well to that. But yeah, not, I guess, too much red today. Let me check our Webull portfolio, though. Hey, what up, Looney? Good to see ya. OLP Papa, no way. Thanks for the gift there. So our Webull portfolio is down 0.1%. That's actually not that bad. And open profit and loss were up 16% all time in here. Actually, I did make some moves. I bought another share of Food too, or actually, I think 2 more shares of Food too. Yeah, we've just been buying the dip on this name, or I bought the dip on this one yesterday. I love Food too. I also bought a little bit of Webull on the dip yesterday. So yeah, that's our Webull account. It's our Moomoo portfolio where every stock is down. And then we also have our Robinhood portfolio, known as our dividend-only account, where every stock in here does pay a dividend. And yeah, these are all the stocks we own in here. Here's my total percent change. We're just barely down on Carlyle Group, so we're almost green on every stock in here. Here's the markets. I guess it's not too bad. The more tech-heavy stuff is down less. The S&P 500 is down 0.7. Yeah, look at the more tech, like Robinhood's up 3, SoFi's up, Palantir's green. Oh yeah, let me check our Roth IRA then. Okay, no. Our Roth IRA is down 0.9% on the day. Here are the few stocks we own in here. And yesterday, yeah, we bought a couple more shares of Webull. I do really like that stock. So yeah, and if you guys got any stocks you want me to look at, let me know there. I want to show you some stocks that I think are potential ones that you could add to the watch list. So one stock I really like right now is Uber Technologies. I mean, I know it's kind of boring, but this is the kind of stock that I think will just continue to climb higher in the long run. And they're at honestly a great price to start the nibble today. You know, not financial advice, start the nibble on Uber. They traded at 23 times forward PE. For Uber, that's very fair. 23 times next year's net income. Why are we looking at next year's net income? Because if we look at their current PE ratio, it says they're currently trading at 10 times PE, and that's actually based off a one-time adjustment. If we go down here to the net income, it says they made 6.65 billion. They didn't actually, they only made 1.1 billion, but that's still a record. That's still great news. Still green over here. So they're making like $1 billion every quarter. The free cash flow looks even better. That's what FCF stands for. They're making over $2 billion of free cash flow a quarter. Let's see. Yeah, so they have the mobility business, like the ride sharing, and then the delivery, like this is Uber Eats. Let's see how that's doing. The Uber Eats business is up 29% year over year. After grew 18%, after grew 6%, after grew 23%, after grew 97%. So they're on an absolute streak of growth here. So that's good news. They're taking stakes into companies like Grab and stuff. So yeah, here's the cool metric we get as well. Their monthly active consumers are 189 million, when this exact same time last year was 161 million. So Uber, I think, is just a safe bet. There is some competition from like Google's Waymo, obviously Tesla Robotaxi. There was some leaked stuff about that today or whatever, but I think that's why Uber might be down. But I think this is a good stock at a good valuation. So hey, no way, Matt, good to see you, brother. And OLP, thanks for that gift. You said Yum China. So this is an interesting name. So this is basically KFC and Taco Bell, but I think just in China. Yeah. So check, or actually, I don't think they do. What's it called? Taco Bell there, but it's basically just KFC. And I know it's weird in China. They have like a yearly tradition of like buying KFC or something. Or does anyone know about that? Yeah, KFC. Let's see how that's doing. It's actually seen some pretty decent growth. It's up 4% year over year. After grew 5%, after grew 8%. So, and that's in USD as well. So let's see. Yeah, obviously all the revenue does come from China. Let's see what their bottom line is. Wow, they're making like 200 to 300 million of net income a quarter. Yeah, that's after they pay taxes. So they really do make like 200 to 300 million of, after tax net income a quarter. And you get a 1.8% dividend yield, very safe payout ratio. What's the multiple? 17 times PE. So there you go. There's your basically China KFC play. Hey, I've been great, Mac. What about you, man? So let's see here. MU earnings come out at market close. Oh, that's great news. Yeah, we got some earnings today. MU's one I think that is going to do good, but we'll just see what happens there. Why was Uber even $20 a few years back? Now it's 80 without significant growth. It's because of the bottom line growth, actually. That's a good question. So why has Uber gone up so much when they're like top line sales? Well, actually, their top line sales have gone up. But basically, if you just head down here, but actually, I'm going to pull up the operating profit because they've had some one time adjustments. But look at this. Years ago, they were losing billions a year, losing a couple billion a year. Well, now Uber's in a position, and this is, their real numbers. They're making like a billion a quarter now. These year over year growth rates to their profit are amazing. So that's what's cool about Uber. They're taking stakes into like Grab, for example. Current info on QQQ. Yo, so a lot of people like the QQQ. A lower expense ratio version is actually the QQQM. Literally the same thing as QQQ. It just saves you 15 basis points on interest. But this is the perfect ETF to legit diamond hand. You buy and never sell this. It's the perfect like diversified tech heavy ETF. It's market cap weighted. It's the NASDAQ 100. It's the same thing as the QQQ. It's just, this literally is the same NASDAQ 100 strategy. Also run by Invesco, just a lower expense ratio. They just don't market this one because it'd make them less money. But yeah, Berkshire money up for you into Nvidia, Apple, Microsoft, Broadcom, Amazon, Google, Meta, Palantir, all the stocks you want to own. So if you don't want to buy all those individually, you can just buy this ETF that historically it's actually outperformed the S&P 500 just because it's a bit more tech heavy. I own a lot of the NASDAQ 100 too. I live in Singapore and the Grab app is just disappointing. Surprised they're still, let's actually check out Grab right here. So yeah, if we go to Grab, so if you're wondering what is Grab, this is basically international Uber. So, and if we go to the shareholder right here, they're pretty much backed by Uber because Uber owns 13% of all the shares. So if you own Uber stock, you own this stock as well. And they basically just got profitable. If we go to their net income, barely, but they're making 10, 20 mil a quarter at this growth rate. What's it going to be the same time next year? Analysts are expecting the revenue to go to 950. EPS is supposed to jump up there. Same with EBITDA. EBITDA is going to go from negative 5 mil to 106 mil if analysts are right there. So anyway, yeah, there's your international Uber. But Lao says the Grab app is disappointing. That's not good. Hey, what up, Tommy? And Push Pros at IONQ. This is kind of a quantum name. I don't like any of these like quantum momentum stocks because they're all like ridiculously overvalued. But they did, what I love about this one is they took advantage of their super high stock price. They diluted the shareholder by $1 billion when it was like close to its peak, but then they bought a company for $1 billion. And that's what I love to see them do. We can kind of see right here, the most recent quarter, they spent the bulk of that. So yeah, that's why their assets basically rocketed up quarter over quarter. So they're finally having some real revenue again. This revenue's all from the acquisition. Amazon actually just sold their entire stake of this stock. Let's see if there's any kind of weekly news down here. IONQ and InRide partner to optimize freight logistics with quantum computing. IO expands in Europe with partners on quantum AI prescription discovery. Huh. Well, anyway, some like I'd keep the allocation of that one very low just because they are pretty risky, but I do like that acquisition they just did. ARCC, hey, this is actually ARCC released earnings on Monday. Can you review them? Yeah, so this is a BDC. This is an interesting name if you're looking for a stock to maximize your dividend income because these are just like REITs and MLPs. Well, not all MLPs, but they're required by law to pay out 90% of their taxable income in the form of a dividend. So they basically move the tax to you. So if we go to the dividend right here, they have a 9.5% dividend, but it's actually sustainable because they're a BDC. But whenever you receive that dividend income, it's actually taxed at short-term capital gains and not long-term capital gains like your normal dividend is. So you are taxed higher on this income. But yeah, they do have a sustainable dividend. Looks like, let's see what the earnings were. So they beat on revenue, actually. They beat on revenue. They beat on EPS, and we don't get EBIT numbers just because of how they report. So yeah, I guess you don't really look at the cash flow statement because it's just negative every quarter, or I guess we just look at the net income. It says they made 400 mil of net income this quarter, so 400 mil of net income. Let's go see how much the dividend cost. That should be a pretty high payout ratio just because of how these work. But yeah, the dividend cost 320 million at the very top there, 320 million of net income a quarter. So that's pretty interesting there. These don't. they give you like 1 to 2% in stock price appreciation on average, like barely. Oh yeah, like look, this stock is technically the same price that it was in 2007, but every year you've gotten, well, they slightly rate basically 9 to 10% in dividends. So interesting name there. All right. Rivian. Hey, what up, Chris? So Rivian, this one I don't love. So Rivian, they just burn and lose too much money. I know they just had like their LiDAR event or something like that. Rivian highlights level 4 autonomy, robotaxi plans, affordable EV strategy, EVs under $50,000. The end goal is so rough for Rivian because it's a low margin business. Like, first off, let's just go to their current numbers, their current net income. This is just tough. They lost $1 billion this quarter, $1 billion last quarter, 500 mil, 700 mil. Like, just for all of eternity, this company loses like $1 billion of net income every quarter. We really want to see these losses narrow because that's super bad. If we go to the market cap, the whole company's worth 22 billion. So whenever you lose 4 billion a year, that's nearly 20% of your company you're losing. And but I do like the Amazon partnership. Amazon is the largest shareholder here. If anyone's seen those like EV Rivian vehicles, I love Rivian vehicles, but I don't love the stock because like when they get profitable, they're not going to be making that much net income, like a low single digit margin. Like that's what Tesla has, a super low single digit margin, and their margins just got crushed even more because of the EV tax credit. So not one I'm interested in buying, sadly, but there is some nice momentum around that one. What about VUG compared to it? Oh, VUG versus so this is the Vanguard Growth ETF. It's not the NASDAQ 100, but it's like their own strategy. Oh, wow. So the largest holding is Apple, then NVIDIA. So it's not exactly market cap weighted. Or wait, what's NVIDIA's market cap? 4.29 trillion and Apple's at 4 trillion. Okay. So yeah, then it's Microsoft, Amazon, Broadcom, Google. Yeah, Google's a big chunk of this. Actually, Google is, when you add both of the C shares, it's right under Microsoft. Anyway, yeah, VUG is another great ETF to buy and never sell. Super low expense ratio. Yeah, 0.04% expense ratio. So for every $1,000, you're paying $4 a year. What app is this you're using? Yeah, hey, this is a brokerage. If you want to get this app I'm on, it's in the link tree in my bio. That very first link there, it's where you buy stocks on. It's an affiliate link, full disclosure. So if you go and deposit, we'll both get some free stocks. But yeah, link tree in bio, first link there. Or you can type it into Google, broker called Moomoo. Hey, what up, Daniel? Good to see you. They're making their own chips now. Yeah, I saw that actually. Yeah, Rivian doing their own chips. That was pretty interesting. Zim, you will be shocked. There is a thing going about buying it. I'm not sure. Let's check out Zim. So this is a shipping company. And this is one of the beneficiaries whenever there's the Red Sea shutdown and the supply chain logistics issues, like there was in 2021, 2022, when the price of one cargo container went from 1,000 to 9,000. They were a huge beneficiary of that. And they have a rule. This is a lot of dividend investors love this one because there's a rule. Whenever they make net income, 50% of that net income, sometimes even more, goes to the shareholder instantly. So if we go to the dividend, it changes every quarter based off how much they make. And check out the top here. This is the annual dividends. Look at 2022 specifically for that entire year. They paid you $27 in dividends. And look at the current stock price. It's $20. They paid you out. That's crazy. They paid $2.8 billion in dividends that year, and the whole company is only worth $2.4 billion. I do wish they kind of retained some of that money, but you get massive dividends with this company. But it's super cyclical. And let's check out their current revenue. Yeah, so look at this. Sometimes whenever they don't make net income, they don't pay dividends those quarters. So the sales are down 35. The net income was 123 mil, 23 mil last quarter. Sometimes like these quarters right here, there was a whole year where they didn't pay a dividend because they lost net income every quarter for that year. So very not one I'd really own, but it's interesting if we get more supply chain issues. All right. Let's see here. What doesn't... All right. FUTY. Is that another ETF right here? FUTY. So Fidelity Covington Trust, MSCI Utilities ETF. So yeah, this is basically like the VPU. What's the expense ratio? 0.08. Okay, let's see what it owns. It's almost exactly identical to VPU in terms of its top holdings because it's market cap weighted. Where NextEra Energy is the largest holding because it's the number one market cap. Then CEG second, Southern Company's third. I actually own CEG and Southern Company. I own both of those. But this is an industry, these utilities, where just almost always they return you around 7 to 8% of all your money every single year. Around 2.5% dividends, or sometimes more than that, 2.6% dividends, and then usually 3 to 4% stock price appreciation on average. And yeah, these utilities in the long run underperform, but they're super safe, and you just be happy to own them. Some utilities, though, I like this one because they're unregulated. CEG right here. This is a great, more like nuclear utility and natural gas play. But this is the largest nuclear play of all time of any publicly traded stock. They own over 30% of all the U.S.'s nuclear reactors. So that's why that one's been on such a tear recently. Plus, just their good fundamentals. And also, speaking of Southern Company, check this out. I just bought them here in my Webull portfolio. If you're looking for a bit of a higher yielding name, Southern Company. If you're looking kind of in the middle there, 3.5% yield, 20 PE, and I just bought them a couple days ago. So yeah, underperformed the tech-heavy S&P 500 and QQQ in the long run, but you just get 7% on average a year. It's kind of like in McDonald's. You're not buying them to outperform. You're buying it for the defense. Kind of like a waste management too. Okay, let's see here. Yo, what up, Sked? Good to see ya. Would recommend buying APH Race at their current levels. Well, hey, actually, I wouldn't full size position this. Like if you wanted Amphenol as 5% of your portfolio, you wouldn't make it 5% of your portfolio at today's valuation, but you start to nibble like I kind of did. Look right here, I bought a share a couple days ago at or 2 days ago at 128. So the valuation of these starting to look great. Same with Ferrari. I've also been I recommend dollar cost averaging. Don't spend all your money at once, but start the small positions today. And if they go up, and if this is their permanent bottom and they never go down from here again, then just GG, you tried. But you got to have that patience and discipline. That's what I think. Because chances are, most likely, for all of history, maybe it will go back to that price. But if you're lucky with some of these names, you find a real diamond in the rough, like Powell Industries, Comfort Systems. Like some of these may never go back to my cost basis, and it's just a permanent kind of yearly return. HCA too, that's a good one. Check the news about it. The CEO tried to buy it for a lower price. Oh, the CEO of Zim. Okay. All right. Southern Company is in talks to acquire Devs as well, I believe. Oh, hey, that's cool. Southern Company, they own a lot of different subsidiaries like Georgia Power and Light, Atlanta Power and Light, Alabama Power and Light. Like there's so many of them. So that's cool to see. And said Bold, you know what? This is actually one of my most recent purchases, and it's not just Webull. So obviously Webull is a brokerage, and that's this brokerage right here. I've been using their app for many, many years, and this is so funny. So these are all brokerages right here, Webull, Robinhood, Moomoo. I own all three of these brokerages. Yesterday, I bought some more of both of these, well, two of these. I bought more Webull yesterday with with my McDonald's dividends. I transferred the $32 I got at McDonald's dividends to my Roth, bought more Webull with those shares. But I also yesterday bought about like $300 worth of Futu. This is the Moomoo brokerage, publicly traded. So we bought them as well. These are two great stocks. But back to the Webull analysis specifically. Webull I like because they've copied basically Robinhood's successful business model. They brought in the prediction market stuff and crypto and the advisory stuff and the monthly subscription. You can now do all these new ways for them to make money they're doing. And so I decided to buy a little bit of Bull. But the sad part is, like, if you zoom out, they're like, hey, this stock is at all-time lows. It's still expensive at this price. That's the tough part. According to these kind of generous numbers, it's at a 62 forward PE. But I'm more bullish than the analysts are because of those features I just mentioned. Because I've been using this Webull brokerage for 4 years now, and we definitely haven't done too well. We're only up 16% all time. But I really like what they're doing, and I just see more and more people on it. So anyway, but I love this one too. I bought the brokerage I'm on right now. Their stock too. I also own Robinhood. I own Robinhood stock too. I'm up like 8x on them. I regret every share I sold to them. Do you think market's going bearish next year? No, I actually think we'll probably hit a new all-time high next year, but maybe I'm a little it's too much hopium. All right. Steven said thoughts on Nebius at this price. The Let's check it out, actually. So actually, NVIDIA owns that company. And hey, Nikita, thanks so much for that gift there. I do appreciate that. I'm sorry about the other stream the other day where you got muted. That was all right. So here's NVIDIA right here. This is their portfolio. Specifically, they own CoreWeave, APLD, and Nebius. All three of these companies are pretty much the same thing where all they do is just own a bunch of GPUs and data centers. And these GPUs are in such demand, they're renting out their extra capacity to basically these cloud companies like Microsoft Azure Cloud. Microsoft Azure Cloud pay Nebius $16 billion basically to rent their capacity from them. So there's nothing proprietary, but they have these great deals where check out the growth that's expected. Oh, well, let me show you the right now growth. The revenue is already at a record. The sales went from 32 mil to 150 million already, and it like triple digit increase in revenue every quarter. So this quarter was a record 150, but look what analysts are expecting in 2 quarters. 469. So just insane top line growth headed there. They are still losing a lot of money, 100 mil a quarter. But as the top line grows, analysts are expecting them to lose another 100 mil next quarter. But then the losses are supposed to narrow to 66 million. So it's an interesting one. Lots of growth. I do kind of think in the long run, they're the bag holders, basically buying these super overvalued chips with the depreciation curve. And there's a whole thesis about it. And there's nothing really proprietary. It's just a bunch of GPUs. But and there's a reason Microsoft isn't taking on the liability themselves in these companies because they don't want to buy these super 55% NVIDIA tax chips. And actually, Google's been getting into TPUs. Anyway, Nebius, I'd keep the allocation low. They're also headquartered in the Netherlands. But it's not that I think they'll do great for probably the next 2-3 years. All right. Maybe it's, I don't know. Maybe, Nebius is going to do good for probably 2-3 years still. So, as these top line numbers just keep growing. So maybe that's like a perfect swing trade, maybe. All right. Love Hood as a stock. Yeah, dude, I love Robinhood stock. I'm a Robinhood user and shareholder. That's one of the stocks I regret every share I've ever sold off. Check this out. I got 5 shares left of Robinhood. I used to own, I had 50 shares, it kind of made sense. Look where I was buying, I was buying at $8, $10, I've been diamond handing this stock since 2021, since the IPO. So just know that. But I was down like 50% on the stock at one point, but then I was up 300%. I was up 3x on the stock. And I'm like, let me just take most of my profits on the table. I sold 50 shares at $36. Well, today Robinhood is 120. So sometimes, and same with SoFi, sometimes your biggest regrets in the long run won't be losing money on a stock. It'll be selling out of great stocks you wish you never sold. All right. I use Webull for charting and alerts. I use Robinhood to execute my trades. Hey, yeah. I use all these apps. Yeah. That's the thing with Robinhood. They it's super simple. Great to buy stocks and options and everything. Roth IRA, but you don't really do analysis on this app. You can't really fundamentally analyze a stock. So that's why we've been going on to this app because they have the best useful analysis tools. This brokerage. All right. Let's see here. All right. Hey, what up, Phil, man? What's up, dude? And Ghana said K and Y. Hey, we'll check that one out next. Someone says I have a Tilray put. Zach said I have a TLRY put. And someone, iCar said, can we look at TRLY? Wait, is this the right stock? You know what? Anyway, this is Tilray. It's kind of that leaf industry company. I can't really get into this industry and talk about it, but here's why I just avoid this one. If you look at the top right, the market cap, it's a $1.6 billion company. Well, here's the bad news. The unfortunate part, they lose. Or last quarter, they lost 1.2 billion, 800 mil. Actually, that was I don't know. I'd be careful with that one. What brokerage are you on? Oh, yeah. If you want to get this brokerage I'm on, or if you want to use my affiliate link, it's in the link tree in my bio, very first link there. Broker called Moomoo. It's my favorite one for analysis. Lowest, cost nothing, no monthly fees. Literally my favorite one for analysis. So, yeah. And it has a nice little APY. Like with Robinhood, you have to pay $5 a month to get it. Well, with this one, there's no cost at all. You just get the 3.35% APY. Yeah, link tree in my bio, very first link there, or you can just type into broker, Google broker called Moomoo. Okay, so let's check out CNC right here. Then we'll check out EDU and KNYJ. Yeah, of course you can do options on here. Yeah, there's a lot of different strategies and stuff you could do. Okay, let's see here. So Centene, I believe this is like the UNH kind of competitor. Let's see. No news around this one, but yeah, it's like one of those Medicare Medicaid stocks, and the profits on the Medicare Medicaid companies will never be the same. They can't really overbill the federal government again, as they have kind of been doing, sadly. But so yeah, their Medicaid and Medicare, that's why the stocks didn't hit so much, because of Medicare and Medicaid. So their top line's still great. Look at this. The revenue's up 18 to nearly 50 billion. That's the same revenue as Meta, 50 bill of revenue, but look at the net income. Whoa. Yeah, so they used to, this is the operating, before the one-time adjustment. So we'll just look at the operating profit. They used to make, money every quarter, but now the past 2 quarters, they've lost money, and net income since they lost 6.63 bill. That had to have been some sort of one-time adjustment. But yeah, so check this out. Yeah. It's just kind of the profits are being, next quarter, they're supposed to lose $1.50 of EPS, or they're expected to. So, but then it goes back to $1.94, but it's going down from $2.60 to $1.99. Anyway, it might all be priced in though. That's the thing. Forward PE, the forward PE is a 29. So I don't. It's one of the rebound plays if the Medicare Medicaid stocks do go back up. Hey, what up, Eric? Thanks for that rose. I do appreciate that. What was this one? KNYJY. Hope I can find this one for you. We can find it. Okay, so I don't know what this is, but looks like some ADR or European stock. So we'll convert the currency from euros to USD just to understand it better. But net income. Okay, so the sales are up 5.6. Not huge growth, but and the profits as well. So, is that real? Okay, so kind of. They're easily making like 200 to 300 mil in net income a quarter. So they're making 250 mil in net income a quarter. What's the market cap? 36. So the forward PE is at 27. That's not too shabby. I don't know what this company does though. Maybe I can check out their website real quick. Oh, at 3.17 dividend. Okay, so they manufacture elevators, escalators, and automatic building doors. That's actually kind of interesting of a sector there. Okay, yeah, they want my cookies. So it looks like they do. Yeah, that's really interesting there. Escalators, elevators, automatic. I'll put them on the watch list. The US version play of that is actually Otis. If you type in OTIS worldwide, what does this company mainly do? They sell new equipment, and that new equipment is escalators. This is a pure escalator play. So they sell the new equipment and then they service it. That's where they make the bulk of their money. They service these escalators, and they've kind of been on a nice growth streak. And look at their bottom line right here. They're easily making 200 to 300 mil in net income a quarter. So actually more than that, like 300 to 400 mil in net income a quarter. So yeah, all this company does is escalators and maybe elevators. Okay, cool. I'll use your, hey, thanks so much, Ace. I do appreciate that. And hey, Lulu, what's up? Rancho said Costco. Costco is a safe one. They are expensive though. That's the tough part. This company should always trade expensive. But the forward multiples of 41.5. So they're trading at 41.5 times next year's net income. It's a tough, even like after this dip, it's still hard to like fully buy the dip on this one. But it's maybe one, you start it as a very small position, buy a fractional share or something. Let's see what their earnings are. So yeah, the 67 bill of revenue, that's crazy. And so yeah, basically, it's a good business model because you buy stuff in bulk, so you get a good deal, and that minimizes their own cost as well. And you have to pay for a subscription to even get into the store. And whether or not you go to the store, you still are paying that monthly subscription. So they're making 2 to 2.5 bill in net income a quarter. They did beat on expectations too, which is good news. Morningstar has this. What's their economic moat is wide. I guess that's kind of cool. We can see what the bull's saying. Membership penetration continues to rise 11% higher than a decade ago, lifting profitability, recurring fee-based merchandise. Kirkland Signatures, 33% sales, strengthens Costco's brand equity. Okay, maybe what are the bad news? A decline in membership renewal rates, currently around 90%, could weaken Costco's most durable profit engine. Digital sales remain at 7% of revenue, and a continued under reinvestment in e-commerce and last mile fulfillment could hurt. So yeah, that's kind of Walmart's really expanding their online presence, and Amazon. Amazon's getting into grocery same day delivery. So it's an interesting one. Probably tough to pay their current valuation, but still a nice one. All right. Well, hey, what up, Safe Man? EAT. Got another one for you, Pan W. Hey, yeah, actually, remind me to get to Palo Alto Networks. I do want to check. Hey, Payne said AMD. Hey, we do. I do own AMD. I want to get to that one. I want to look at E real quick. He says EAT launched uh, feeds hunger on Coinbase. Will be billions in market cap eventually. I thought this was okay. So this is actually Chili's. Has anyone heard of baby back ribs, Chili's? Okay, but they are publicly traded under the ticker symbol EAT. And sorry, my Wi-Fi is just terrible right now. It does not want to load this. Yeah, literally all the revenue, 98% of the entire business is Chili's. And their stock has done surprisingly good, for a restaurant in this environment. That's pretty freaking good. And they pay, I think, a dividend. Or no, they cut the dividend. They cut the dividend, and the shareholders actually rewarded them for that because they can retain all this money they're making. Whoa, look at these year-over-year comps on their net income. 158, 86, 144, great year-over-year comps. So they're finally fixing their margins, and they don't really suffocate them with the high payout ratio. So yeah, they trade at 15 times net income and 13 times next year's net income. There's Chili's for you. A lot of restaurants are struggling. Like, just for an example, Wendy's. Yeah, this is crazy right here. Look at Wendy's stock. This is kind of depressing. Pretty much all-time low on Wendy's. So all right, let's go look at AMD. So I do own AMD. We are a shareholder, but oh wow, things just go green. We'll actually check the QQQs after this, but we are a shareholder of AMD. It's tough to buy it now. According to them, the forward PE is an 82. That's like 3x more expensive than Nvidia. But yeah, I really wouldn't buy it at this price. That's the tough reality. This one says the S&P global number said the forward PE is a 62, so a bit more generous numbers there. It's a 62 forward PE. Let's go look at their numbers. So their GPU market share went down from 16 to 14. Nvidia took that market share actually. Yeah, big data center play. How's that growing actually? Record up 4.34 billion. It's never been over 4 billion before. So record quarter there on the data center business, client and gaming. How's that doing? I am curious. Are you in Duolingo? I actually am not in Duolingo stock. It loaded. There we go. So wow, I'm surprised. That's up 72% year over year, their client and gaming. Anywho, let's go look at see what they reported versus what the analysts expected. Big beat on revenue. Analysts expected 8.7. They did 9.2. They beat on EPS and they beat on EBITDA. So it really was a triple beat quarter for AMD. They print free cash flow. That's what FCF stands for now. Triple digit growth rates basically every quarter. Net income looks great. Fortress balance sheet, just a little pricey. And I'm a shareholder though. I might be biased on that analysis, but they're pricey. And actually, sadly, if someone said would I rather buy, or not sadly, but would I rather buy Nvidia or AMD right now, I'd pick Nvidia because they're super cheap actually. Easily could justify like $250 on Nvidia. Otis is the elevator king. Yeah, Bandit, what's up? We could check out Duolingo too if y'all want me to. All right. EAT on Coinbase. That's funny. Okay, let me get to Palo Alto Networks. I wanted to get to this one, and then we can get to Toro and TerraWolf and AbbVie. Hey, what up, Isaiah? Good to see you, man. So you know who actually owns Palo Alto Networks? Nancy Pelosi does. The genius trader apparently. But yeah, we can see all of her holdings. They're all publicly traded. Are publicly available because she's a super investor. Her net worth is over 100 million, so she has to disclose it by SEC law. But here's Palo Alto Networks. This is one of the parts of software that are like immune, I think, to the AI bubble because they're certainly super pricey, 88 forward PE, but they're a cybersecurity play where over half the S&P 500 is using their cybersecurity stuff. Hackers, I think, will utilize AI and only get better at hacking. So the demand for cybersecurity is only going to be needed more and more from today that I'm a believer of. This is a subscription model play. This is what you want to see for a growth company that you're just going to dime in hand. Look at their subscription revenue. Every year, it just hits a new record. It's crazy the growth. So that's why I think this is a safe just buy never sell cybersecurity play. They're making a couple hundred mil of net income a quarter. Same with free cash flow. Actually, they made 1.7 billion of free cash flow. Let's see, are they putting that to work? We go to their cash from investing. Yeah, so they're investing like 500 mil to a billion this quarter. Whoa, I think Palo Alto Networks is actually buying CyberArk. Um, Report highlights AI cloud-driven security risk. Reports API attacks rising by 41% is what they're saying. So again, I think the demand for cybersecurity is always going to be needed. So yeah, there you go. Nancy Pelosi's a shareholder of that one too. A little pricey though. I like CrowdStrike too. I love CrowdStrike. Hey, what up, OFP? So, can we look at AbbVie? Is it a buy after the dip? I think so. AbbVie is one of the few stocks that have like a high yield, but I think will also continue to have great growth. If you look at the dividend, you get a 2.9% dividend. And here's how I kind of do my math. You should get 7% of your money back every year, like in any environment. So 3% dividends, 3% stock price appreciation, maybe 1% in buybacks. So the forward PE is a 23. So they're trading at 23 times forward PE. And this is a growth company, in my opinion. Check this out. If we go to SkyRizzy right here, their largest prescription, it's 29% of the whole company, SkyRizzy. Well, check out this growth. This is what I love to see. And I think that's this growth, and I'll show you some of the other growth rates, justify the 23 multiple. You know, it's up 46%, after grew 50, after grew 50, after grew 85. Like they just hit a new record every year, every quarter. Sales were 4.7 billion when it used to be nothing. They also have like Rinvoq, whatever that's pronounced. That's also up crazy, up 35 after 45, after 55, after 56. Like insane growth on a lot of their prescriptions. So but they've been having some one-time adjustments to their net income. You see like these year-over-year declines of their net income. Those aren't actually real. The core business is actually improving year over year. But anywho, AbbVie's a great one to never sell. All right. Counting what up said, P&G, what up, Steven? Let me actually get to P&G right here. Oh, is that Kraken Robotics, the Canadian company? We'll check out that one. Can you look at GME? GameStop, maybe. That's kind of a momentum kind of meme play. But they have a lot of, I think, net cash. Look at ZP. Hey, maybe we'll check out that one too. Quantum play. Okay, well, here's Kraken Robotics, a Canadian company. They're not huge. You know, they're worth 1.8 billion. But let's go check out their numbers because that's some impressive stock price appreciation, and it's going to take more than momentum for the stock to look that clean. Let's go see what their numbers are. So they sell products and services. How's that doing? Well, I guess they're Canadian, so they report. Oh, well, first off, let's convert this to USD because they are a Canadian company. So services for the full year, that grew 36% year over year. Well, do we get the quarterly data here? Yeah, we don't. Okay, well, we get this down here. So revenue is up 55% year over year. So revenue is 22 million. I think that's a record. Yeah, it's never been over 22 mil before. And what about the bottom line? Are they making money? Well, they have a great balance sheet. Look at that. But was that real? Yeah, they really did make 2 mil in net income. They're losing no money. Like the core business is making money every quarter. That's what you want to see for a robotics name, for them to barely lose any money. Really good balance sheet. I assume they diluted you. Yeah, so they diluted you by 80 million, but it fortified their balance sheet. So interesting name. Again, small kind of robotics play. I wouldn't trust too much money in this name. Looks like they did miss on expectations slightly this quarter. But revenues, literally, if their analysts are right, is going to go from 11.2 million to 30 million, a 3x in a year. So maybe it's pricing in that growth. So, okay, nice. Trade Desk. Yeah, Trade Desk is still, that's the sad part. Even after the huge rally or huge dip on, hey, Sked, he said, look at EDU. Let me know which EDU you're talking about. Is it New Oriental or EDU Holdings? And we'll check it out, Sked. Yes, sir. Hope you're doing well. Yo, you too, Travis. Thanks so much, dude. Reddit at this price, and let's do Reddit real quick, actually. A lot of people think Reddit is like a meme stock, but this company is no meme. In my opinion, they have phenomenal fundamentals. They are super expensive here, but I'm a shareholder. I bought them at, less than half of their current market cap and valuation. So for me, it's just like a never sell. I wouldn't start my position in Reddit today, but I put them on on the watch list because it's certainly not a stock to ignore. They have like insanely good fundamentals. I can't believe it. Like if we go to their revenue, the sales are up 67%. After grew 67, after grew 24, after grew 12. So incredible top line growth, and not just top line growth, but bottom line. For the record net income this quarter, 162 mil. They're actually making great net income every quarter. And just a cherry on top is their freaking fortress balance sheet. They literally have no debt whatsoever, 2.23 billion of cash and no debt. Like, that's just great. Yeah, how does Reddit make money? Yeah, advertising. So there are, and I think they're getting licensing revenue from OpenAI and Google Gemini whenever they mention and train their LLMs off Reddit. They're getting like some super high margin revenue from that right now. But their ARPU, their average revenue per user, is actually up 48% year over year. They make around $5 per user. I don't know how they pulled that off, to maybe just more ads or something, but they're, yeah, actually it is Reddit ads. That's exactly it. Anyway, they're expensive though, but I love them. Okay. Hey, great stuff. Can you adjust the screen so the ticker's visible? Oh yeah, hey, if you hold down on TikTok, you can hit like clear display. And if you're on YouTube as well, you can, I don't know what it's exactly called, but if you hold it, you can also like remove the kind of stuff there. But yeah, sorry if I hid the ticker there. Reddit, P&G, they're all in the middle there, our history of stocks we've been looking at. So let me actually go check on the market really quickly. Let's see how stonks are moving. Hey, we actually just went back to green in our main portfolio, our dividend-only Robinhood account. Let's go see what the Qs are doing. Well, as they kind of load in here. Because, so yeah, the Q, oh, no way. The Qs are almost back green on the day. Qs are only down 0.02. SPY's going up a little bit. So, hey, nice. We're seeing a slight little recovery there. That's good news. Would you invest in Robinhood at today's prices? Not really. I do own Robinhood. I'm a shareholder of Robinhood, but I wouldn't buy them at this price. So yeah, I did say I'll get to GameStop. The thing is, this is a stock that dilutes the based off just how GameStop is. The company will not allow the stock to rally because they issue shares every time it does. And so every time there is a monster rally, like every time Roaring Kitty tweets, always the reason it falls is because they dilute you. And I'll show you that down here. Actually, let me go to this balance sheet. Actually, this is what sucks. They used to have this great balance sheet. I actually like their old strategy, but they have a huge, well, I'll show you down here. Look at their total debt in the bottom left there. Their total, or kind of top middle, but it went from 9 million of debt, no debt at all. Exact same time last year, they had 9 million of debt. Now they have 4.2 billion of debt. They issued debt just so they could buy Bitcoin, I believe. But that's why if you go to their cash pile, they have 8.83 billion of cash. 4.2 billion of that came from them issuing debt. But the other, they actually do have 4.4 billion of net cash after they had to pay off all their debt. They have 4.4 billion in net cash, which is almost 50% of the market cap. So that's interesting there. They're investing in a bunch of Bitcoin right now. I think they spent $1 billion this quarter just buying Bitcoin. Looks like they missed on the revenue. Yeah, you're not really buying them for the core underlying, business here. Sales are down 5% after they fell 20, after they fell 28. So after they fell 2, so you're not buying them for the core business. It's kind of a momentum meme stock. Even with the clear display, the ticker's only half visible. Really? That's actually. I have the TikTok studio pulled up here. You should be able to see it all. That is strange. Also, actually, if you want to support me, best way to support me might be easier. And what up, man? I know you're always in here, Lexi. Watch the stream from YouTube. I'm also streaming on YouTube. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. Yeah, just type in YouTube Nathan Robert. That's the best way to support me. Sub to there. I'm trying to build up my viewers on there because most of our viewers are on TikTok. So here's Qualcomm. Yo, this is a cool stock, Travis. Unless Quantum is Google. Yeah, hey, Google, Honeywell, those are my favorite way. And even Microsoft to get exposure to Quantum. Really stay away from these micro cap. But here's Qualcomm. Now, I was reading the Morningstar research on this one. Qualcomm's really cool because check out what the bulls say. The very first line here, Qualcomm collects royalty income on the majority of 4G and 5G phones sold as it holds many essential patents used in these networks. So they're collecting like this royalty stream. They did have a one-time adjustment to their net income this quarter. It says they lost $3 billion. They didn't actually. Their core business made $3 billion. So that's why we don't really look at their current PE ratio because that negative EPS number made the EPS spike or the PE spike. But the forward PE on Qualcomm, this is a great dividend growth stock, I think. The forward PE is a 17 PE. If we go to the dividends right here, you get a 2% dividend and they raise it every single year to even faster than inflation. So 17 PE. Yes, smartphone chip market share 26%. So there's kind of your Qualcomm for you. Cheap kind of value stock. They haven't done too well though. Like why can we even download an app? It blocks. Oh, this app isn't available in your country. Oh, that sucks, man. Yeah, this is actually a brokerage, where you buy stocks on. So yeah, ask for a bunch of information. Yeah, this app is only available in some countries. But if you want to get this brokerage, my favorite brokerage, it's in the link tree in my bio, very first link there. I know it's available in US and Canada for sure. But okay. EDU, New Oriental. Let's check it out. EDU, New Oriental stock. It's an ADR. The market cap is 8.6 billion and the forward PE is a 17.8. So there was a huge decline in 2021. This must be a China education stock, I'm going to guess. So basically China forced, and I remember this back in 2021, this was a long, long time ago, but they forced all these education stocks in China to go to basically no longer be for profit. But let's see, education services and test preparation courses. We can kind of see their annual revenue. Yeah, tanked after 2021, but now it's recovered almost back to a record. Did we get the quarterly data here? Nah. But let's check this out. Are they making net income? They are. So they are making net income every quarter. That's great news. Was that real too? Yeah, they really made 250 million net income. So that 17 forward PE does look real. They even just paid a dividend, it looks like. Well, hold on. How much was that dividend? Wait, is there any news down here? Nope. But they just paid a 60-cent dividend. Not too shabby. Yo, what up, Nick? Good to see you, brother. Good to see you. Fred said honest company. To be honest about the honest company, I don't see why people love this name. They first off, they just sell a commodity. They sell diapers and wipes. That's 70% of their revenue. Then like a few other beauty products, but they're a very small one. They're only worth 319 million. Or I can see why people like them, but I can also see why the stock has done so bad because this is what you don't want to see. If you go to the revenue, the sales, the lifeblood of this company, the sales are actually negative 6.7% year over year. Last quarter was only up 0.4. So when you add inflation to this, that's not great. Revenue's down 6.7, but good news. It looks like they are making net income every quarter. Are analysts expecting? Oh, wow. Look at this. Analysts this quarter expected 99 mil of revenue. They only did 92 mil. And look at that. Whoa. The revenue is supposed to fall even more next quarter if the analysts are right. And they were wrong about this quarter. They did worse than expected. So looks like the future sentiment as well, just from the analysts, aren't great either. Revenue is supposed to continue to decline. So that kind of explains why I think this stock has done so terrible. Same price that it was in 2022. I'd be super careful buying more of that one, but OBD said, are you invested in any healthcare stocks? I am. So I own a hospital stock. I own ticker symbol HCA Healthcare, largest holding in my Roth IRA. I own a CorMedix, they own one little prescription called Def and Cath. But yeah, that's pretty much it. HCA Healthcare is my main healthcare play. There's not really any better ones than that, I feel like, in terms of fundamentals. I guess I got a little Pfizer. Actually, Pfizer's down bad on the day. Yeah, they're down 5.22%. I never really recommend anyone own Pfizer, and I'm actually considering giving the boot to them and sell out of them. So yeah, those are my healthcare names. All right. Aaron said LEU. This is a uranium play. This is actually probably my favorite uranium play if I had to pick one behind CEG, Constellation Energy. But LEU, Centrus Energy, they're trading at a 60 forward PE. But the fact that they have a forward PE is great. That means they're supposed to make net income this next year. Check this out. They sell uranium basically to nuclear reactors because nuclear reactors are powered off uranium, the splitting of the atoms and stuff. So check this out right here. They're actually making, like if you average out the 4 quarters, they're making consistent net income every single quarter. And if you look at all the other uranium names, the numbers look terrible. So LEU, and actually they're my second favorite uranium play. My number one favorite uranium play of all time is CCJ, is Cameco. That would be the number one uranium play. But then the uranium beneficiaries, that would be CEG. Whoa, Constellation Energy is at a new intraday high right now. This company literally owns 30% of all the US's nuclear reactors. And I just love them. So yeah, the US is starting to buy our uranium now from China, or we're stopping buying uranium from China and Russia, and we're trying to get our uranium here and from Canada now. Kind of cool. Hey, what up, Spice Room? He says I got you. He says FRSPF. I hope I can find this one for you. So I did look up that ticker symbol, Spice. If you maybe give me the name of them or something. That's like a weird ticker symbol. FRSPF. FRSPF. Yeah, I did try and look for it there. If you got another stock there, let me know there. Is Lumen going to bounce? Hey, Amez, what's the ticker symbol for Lumen? I forgot that one. I haven't looked at them yet because Jessica Alba is not there. Um, oh, for the Honest Company. Yeah, Braden said, "Can we look at Netflix? Let's do it." So Netflix. Ooh, IIPR. I used to own that one, but then some of their tenants stopped paying, and we'll actually look at them. I actually have made some YouTube videos about them as well. Visa just announced it'll be using USDC to settle payments using blockchain. Yo, I wonder if that made uh so actually Circle is up on the day. Dude, Circle is a really is a great stable coin company. Almost let's see this actually. I think they were up, yeah, almost 10% on the day. Circle's up 9, Robinhood's up green, SoFi's green, Bitcoin's green. Hey, let's go. Looks like some of the more tech heavy stuff is starting to come back a little bit. That's good. But let's look at Netflix right here. Netflix is actually one of the reasons they've been getting hit so hard is because they're buying Warner Bros. Discovery right now. So they announced they're buying Warner Bros. Discovery. This we can't really see it here, but they were announced to buying them for $86 billion. But then Skydance, aka Paramount, came in and bid over $103 billion. So if Netflix wants to now bid up the price and actually buy them, it's going to be even more decretive to their EPS, and that's what was kind of being priced in. But let's ignore that whole acquisition. That aside, this is a great stock. If we look at the valuation, the forward PE, which doesn't include any of that decretive. Anyway, the forward PE right now is a 30. That's very fair. I love Netflix. They're a subscription model company. A lot of people would cancel their Netflix subscription last. I know they sometimes get boycotted a bunch. I don't own Netflix. I actually own Disney stock. Disney has been the loser of the streaming wars, but yeah, we can see Netflix has 300 million premium subscribers, and they literally make $11.69 per month per user. And here's the bottom line on Netflix. They make 2 to 3 billion of after-tax net income a quarter. This is after they paid 600 mil of taxes. So these are great net income numbers. 30 forward multiple. The free cash flow is insane as well. So there's Netflix for you. I think it's worth starting the nibble right now. It's worth starting the nibble. How do you calculate intrinsic discounted cash flow for a stock or business? Well, there's so many different calculations you can do, and I always kind of do my own little analysis. I blend a bunch of my own favorite metrics together. We'll look at Lumen First Phosphate Corporation. It's a lithium mining. Okay, we'll see if we can find that one. So here's Eli Lilly. This is the company. So a lot of people know Ozempic. Ozempic is that weight loss prescription, but they have the second best weight loss prescription called Zepbound. And the growth of Zepbound has been insane. And they're even working on right now, Eli Lilly weight loss pill may receive FDA decision by March 2026. They're working on a weight loss pill because right now it's an injection. And a lot of people that don't like that, Elon Musk is on Ozempic. Eli Lilly raises guidance amid 54% revenue growth driven by GLP-1 prescription. Yeah, the Zepbound generating over $10 billion in quarterly revenue. If you look at this quarterly revenue, and we had it up, but literally a year ago, the revenue was 300 million a quarter. It was like 300 million every quarter. Now it's 10 billion just this. Oh, wait, that's Mounjaro and Zepbound. Well, anyway, the growth is nuts on those two. They got added into Medicare and Medicaid. They just beat on every expectation every quarter. A phenomenal stock to never sell. The revenue, the sales, I can't believe this, are up 53. The law of large numbers was hurting them. They had 11 billion of sales, but they still grew it to 53%. So they made 17 billion of revenue. They netted 8.5 billion. They expanded margins on that. Sales are up 50, profits are up 86. So everything there is headed in the right direction. Nice little dividend play. But the risk reward is probably tough buying them at all-time highs, but they certainly deserve a high multiple because they're so quality. What was this one right here? Let me see if I can First Phosphate. We found it. PHOS. No way. We found it, Spice. Let's check it out here. So, yeah, very small company. The whole company's only worth 120 million. So that's a very tiny market cap. We'll convert the currency to USD, just kind of get a better idea there. So if we go to the right now revenue, it says no data because they've never sold anything, not a product or a service. And it looks like analysts aren't really expecting any revenue anytime soon. They are losing a little bit of net income a quarter. Well, see, when you lose 4 million, it's tough when you're only worth like 100 million because that's a lot of your company. And the balance sheet isn't, well, it looks good, but there's only 4 million of assets. So yeah, they've having to dilute you every single quarter. I'd be careful with this one, but they certainly have had a nice little appreciation in stock price. There's no quarterly reports because there's no report revenue. So mineral properties, first phosphate. So maybe they own a mine. Look at that robot image. That's funny. Corporate presentation. Maybe we could see their investor presentation. Maybe it's an update on when they expect to get sales. Yeah, we know the whole global forecast, but anyway, where is the expectation? They're debt free. Well, yeah, they have no debt. They were originally worth 153 million. You know what? Anyway, there's an interesting, I guess, I wouldn't touch that one probably. Super small market cap. Ticker, yo, hey, adventure. Yeah, hey, my bad. The ticker's in the top left. If you miss it, you are able to rewind it. Someone said Costco. Hey, Paul, I feel bad. We just did Costco like 5 minutes ago. So you can, if you want to, you can go on the YouTube stream and like rewind it 5 minutes. But if you remind me in like 30, 20 minutes or something, we'll look at it again. We'll be live for another hour for sure. So what's up for everyone? If you guys actually want to hit the follow button, we stream every single day. And I sell nothing at all. I have no course, book, WhatsApp, literally nothing at all. I don't coach. So the only way to support me if you wanted to is just sub to the YouTube. So here's IIPR. Now, one of the reasons they gapped down on this day specifically, there was no earnings report this day. It was the report that one of their tenants stopped paying. So this is in the leaf industry. You're right, that lettuce industry, and they're a REIT. So they own the leases, the triple net leases, the land under these farms. And dang, yikes. So the revenue's down 15%. These are bad year-over-year declines. Luckily, they have a phenomenal balance sheet. I wonder if we can even find one of our old videos about this stock. Hey, yeah, look, there's one of my old videos. 5 high-quality REITs. I guess that didn't age too well. Anywho. Yeah, that's why you don't listen to me. No, this is financial advice. Be super careful. Always do your own research. Oh yeah, I wanted to get to that one earlier, my bad. Hopefully it's not some small cap. So Zapata Computing. Okay, so it is. Actually, we're not really going to cover this one. If you look in the top right, the market cap, the whole company is 34 million. And all that market cap really came today as they gapped up. So the whole, look at the no volume candle. So the whole company's worth 34 million. You could buy the whole company for that price. And the sales, well, this is from 2024, so not even recent data. Ooh. So that's why they're pretty much priced for bankruptcy. They have so much debt, no cash. They're super leveraged, no revenue either. So yeah, that one, it's not a good quantum play, but it could be a fun little short-term swing trade momentum play, but certainly not one you just buy and hold forever. All right. Oh, hey, Wookie. Yeah, that's maybe what he meant. Thanks for that, Wookie75. Can you make a video on how to calculate intrinsic discounted cash flow? I don't really use the discounted cash. I always do my own little analysis. I use net income. I use bottom line because, free cash flow and the discounted free cash flow, it's so adjusted. That's why you don't always look at free cash flow because for Roblox, for example, you know what? That's a great example. Got to look at all the metrics, for example. If you look at the free cash flow, remember the free cash flow, it doesn't include non-cash expenses, aka stock-based comp. That's why for some companies like this, the cash from operations, I'll kind of explain all the metrics here. This is the number, basically. This is the operating profit before CapEx and before non-cash expenses, what the core business is doing. And that's why the cash flow was 550 million, but the net income on Roblox, look at this, the net income, GAAP net income is negative every quarter because of the non-cash stock-based comp expenses that is included in GAAP net income. That's super important to look at because part of their growth, again, they would have to be paying. This is why I'm glad they included this. If they did not pay employees with their stock, they would have had to pay them cash of 200 or 300 million every quarter. So the only way they can keep their business going is by issuing shares and diluting you. And that's why I'm glad that it's included in GAAP net income. So also they're very leveraged, kind of risky balance sheet there. But yeah, that's why I look at the free cash flow, I look at the net income, I look at the operating profit, because the operating profit, the net income has one-time adjustments, like Tesla does them all the time. Same with EPS. So there's so much to look at. Okay. Uh-oh. Dang, that's loud. TikTok just made me fill out a CAPTCHA. Okay, we're back. TikTok said it was AFK and had to fill out a CAPTCHA, but we're back. Okay, iShares opinions. Hey, which iShares? That's the BlackRock ETF. You know, whenever BlackRock has an ETF, it begins with iShares. Let's see, PBR. What's that one? PBR. Oh, this is one of those super high dividend plays. So again, you buy this to maximize your income. If you look at the stock, it's the same price that it was in 2005. You actually want to know a fun fact: the WTI oil crude blend is basically oil prices technically should be the lowest they've been since February 2021. We were looking at oil prices earlier. Oil prices are the same price in February 2021. So oil should be cheap right now. But anyway, that's probably why the stock is not doing too well, but you get a high yield. That's kind of one of the cool features about them. Whenever they make a lot of money, they return a lot of it to the shareholder. Currently says the payout ratio is 200%. That's not great, but yeah, 15% dividend. You know, the stock price is $11. Normally they give you $2 to $3 a year in dividends. Well, actually, before COVID, it was like 20 cents. Now it's exploded after that. Anywho, not the best oil and gas stock. I actually own, Murphy USA. This is one of the oil and gas stocks that don't suffocate themselves with a high dividend payout ratio, and why I love them specifically. Look at this. Look at the dividend growth they're able to do, and the payout ratio is still only a 7%. Yeah, the yield's only 0.5, but the real benefit is the share buybacks that they're doing. First off, look at the net income. Obviously, this company's still affected by the lowering oil prices. Look, sales are down 2.4 after they fell 9, but look at the net income. They're still making, this was a one-time adjustment, like easily over 100 million of net income a quarter. Well, like 150 million normally, 150 million net income a quarter. The dividend only cost $10 million. They could pay for their entire year of dividends times 4 in just the most recent quarter. And since they have so much left over cash, look at the line above it. The stock buybacks. They're doing 100 to 200 million of buybacks a quarter. And that's what I love about this one. That's my oil and gas play because of the growth I think the stock will have. Yeah, low yield like your normal, but the buyback should even out the stock and send it higher. Paul said, what do you think of RZLV? Is that Resolve AI? I don't love this one either. Or I just don't think there's still... okay, well, let's see this right here. Actually, here's an article at the top here. Resolve AI gains on December revenue exceeding 17 million. Wait, company said its revenue in December is expected to exceed 17 million. So just in December, 17 million revenue. And whoa, the stock went up 31% on the day. They must have just released this news. So let's see. Well, that'll blow out these estimates next quarter's. Let's see their current revenue. So, wow. So this is I don't know if this is a U.S. company then. Yeah, so this is a London stock. They're headquartered in Greater London. So that's why we don't get the freaking quarterly reports. Okay, well, anyway, there's just supposed to be a lot of massive growth income. It looks like for the full year 2024, the sales were 180,000 for the entire year. But I guess it's expected to be over 17 million for 2025. Anyway, I'd be so careful with that one. They're only worth 990 million. I have the A shares. Like the preferred. Yeah, Resolve, that's some good guidance though. That were up like 34% on the day. That's actually great guidance. All right. Hey, good time. What up, dude? Good to see ya. Ooh, yeah, like Navitas. That's not a good one either. CAC said APLD, Applied Digital. You know who actually owns Applied Digital? I don't love this one, but is NVIDIA. If we go to the actual NVIDIA portfolio, and NVIDIA basically took a stake into them and gave them a bunch of money just so they can go buy more NVIDIA chips. This company, at the end of the day, it's really just a company that owns a bunch of GPUs in a data center. Literally, that's it. And but these GPUs in data centers is in such demand from cloud hosting, like the Azure cloud. It's given heck of deals. Let's see if there's any new. APLD faces investor concerns over expansion and debt. Well, let's see. Median price target of Okay, so there's no real news here. But yeah, data center hosting is 60% of the revenue, high performance computing or hosting, a high performance computer hosting. But yeah, look at this. They had a great beat on earnings this quarter. They expected 45 mil and they did 64 mil of revenue. So that's good. If they keep beating on these expectations, next quarter they're expecting 82 mil. That's going to be a record. So there's no bottom line here. They're not making it worse. Yeah, no forward PE, no PE on this company because they're not expected to make any money for at least 2 years or a year to 2 years. But they're kind of like a high beta Nvidia. In the long run, they are kind of the bag holders. Yeah, I wouldn't own them with a lot of money. I think them APL CoreWeave, they'll all do good for probably the next 2 years. But in the long run, it's a tough hold. But they have great top line growth right now as just this cloud demand. Okay. Ooh, wait. What is this one? What do you think of NWG? Do you think it's a good time to buy Amazon? Oh, heck yeah, yo. We'll actually look at Amazon too. It's a small bank stock in the UK. Oh, so I'm guessing it's not NatWest. Well, wow. Or wait, is it? Let's see. Yeah, this is it. Okay, this is it. So, oh wow. So there's the 2008 price. They were $235 and now they're 17. Well, that's obvious. Did they IPO that year? I guess that's a rough time to IPO. But the stock has had a great performance the past year. The stock went from 7 to 17 in just a year. Whoa. So they've had a great stock performance since 2019. Let's see. We'll convert the currency from British pounds to USD just to kind of get a better idea of what the business is actually reporting. So commercial institution, retail banking. How's the retail banking? Oh, that's up 15%. Commercial is up 7%. So let's see. Are they beating expectations? Yeah, big beat. Analysts expected 5.49. They did 5.825. Beat on revenue. They met on EPS and they beat on EBIT. So yeah, it looks like the right now numbers look good. Sales are up 16. They really did. They're netting $2 billion a quarter. That's really good. So they have like a 33 or 38% net margin. That's really good. So actually, they're interesting there. All right. Ooh, yeah. The thing with Navitas is Navitas Semiconductor. Nvidia's trying to save this stock, but that's the only news. That's the only hope for this company is if Nvidia actually saves this company because they are at their numbers, they're going bankrupt, like for sure. But we'll see if Nvidia saves them. Like here's let's just look at their numbers real quick. If we look at the revenue's down 53% year over year to 10 million in revenue. So they have 10 million of revenue, and the analysts are expecting next quarter to fall to 6.9 million, 7 million. It's going to go over 47. So they have no sales. They burn an insane amount of money, but you don't buy this one for the fundamentals. It's kind of like hope Nvidia saves them. This isn't a good semi play. They have no revenue, but it's a momentum play. It's a swing trade play. I think it's a tough one to trust, I think, and I wouldn't really touch them. What's this app? Yeah, if you want to buy stock, this is a brokerage where you buy stocks on, ask for a bunch of information. If you want to get this app, it's in there. This software, it's in the link tree in my bio, very first link there, broker called Moomoo. It's an affiliate link too, actually, full disclosure. So if you go and deposit $100, we'll both get some free stocks. But my favorite app to buy stocks on, it's free. Coinbase, Paul, actually, who owns Coinbase is Kathy Wood. We get over here to the Kathy Wood portfolio. Oh yeah, and you can kind of see all the super investors portfolios in here. Maybe we'll check some of those out if we're bored a little later. But yeah, Nvidia right here. Nvidia, or not Nvidia, I mean freaking Kathy Wood. Kathy Wood's a big shareholder of Coinbase. It's her fourth largest holding. She's kind of lost a lot of respect because her ETFs haven't done too well. But as we can see, Coinbase and Bitcoin, while they don't move exactly, they always rhyme together. You kind of especially when we go to right here, as you can see, Coinbase and Bitcoin is under it. They kind of rhyme together normally. So let's go look at their numbers. Well, here's a really cool piece of data here. This is their monthly transacting users. So not just monthly users, but monthly transacting users are 9.3 million. When this exact same time last year, it was 7.8 million. So a nice little bounce on that. Let's see what their news is. Oh yeah, this is huge. Coinbase to launch prediction markets. So this prediction market will make them, I think, a boatload of money. It's made Robinhood a lot of money, so they're getting into this industry. Coinbase ordered to pay $600K in arbitration over security failures. Well, I guess that's not good. Coinbase CEO Armstrong sells all directly owned shares, totaling 64 million. Okay, well, anyway, let's go look. Well, here's the thing. If you look at the forward PE, and this moves with Bitcoin normally, so the financials don't always matter, but for this stock specifically, but the forward PE is a 37. The current PE is a 21, and the forward PE is a 37. So they did have a little one-time adjustment to their net income. That's why we're looking at that. So they are a little expensive, like on a forward PE basis. Usually a lot of these, fintech names are. But yeah, Coinbase does make, if you average it out here, they are really making like 500 mil a quarter of net income. So 2 bill a year, maybe, of net income. Do you day trade? No, I actually just I'm really boring. I diamond hand good stocks for the long run. Well, I have this every stock. Look at that. All are down on the day in here. So hit the like on the stream for me. We got every stock down on the day. But yeah, we got a lot of different portfolios here. Like our Robinhood account, that one's up 0.07, barely green on the day. The audio processing on the mic, did it just like be weird or something? Hello. I don't know. Did the mic change? Someone says the audio. Well, I don't know. Hey, what up, fella? I don't know if something broke there, but what's up? Okay. Let's see here. What stocks? Oh yeah, and we have our Weeble portfolio as well. Here's our all-time performance here. We definitely haven't done too well. We're only up 16.5% all-time in here. So yeah, and we're slightly down on the day. I think the Qs might be green. Let me go check that out one more time. Actually no, a slight little rotation. Look at, it's been such a flat up and down volatile day on the Qs there. It's a weird chart. And we get Micron earnings today too, right? So that should be a fun little one that might move Nvidia. So, yeah, Eric said, can we look at Amazon? Oh, and he said Monday. Actually, let me look at this one first. Marcus said, can we look at CSIQ? And then we'll pull up Beat and Monday.com. Where it's CSIQ. I'm typing that in wrong. Oh, Canadian Solar. So here's another solar play. My favorite solar stock is First Solar. So here's Canadian Solar. Let's pull this one up. So this stock is worth 1.5 billion, a small market cap. Their forward PE is a loss, so they're not expected to make any net income. Yeah, dang, look at this. So Canadian Solar, the stock is actually the same price that it was back in 2008. So you bought the stock in 2008, you're down on your money. And yeah, the net income looks really choppy here. What did I do? So Canadian Solar Infrastructure. Yeah, so if you had to pick a solar play, if I just had to bet on one to buy and never sell, my favorite one is actually First Solar. Check out this one right here. They're actually, no. They're also the same price as they were back in 2008. But here's the difference. This company, if we head over here to their net income, check this out. Their net income positive, easily making 300 to 400 mil of, after-tax net income. Like, that's great news on First Solar. Plus this really good balance sheet that just adds safety. So I think that one maybe would be the safer, more play over CSIQ. So let's do MNDY, Monday.com. Then we'll do Beat, or some of these other ones. So Monday.com, they're a $7.7 billion company. So the forward PE is 120. So that's expensive. And, a lot of these software names are getting hurt by the AI thesis, but I wonder if there's any coverage on this name. So enterprise customer adoption and new product launches, including Monday CRM, drove significant revenue growth and contributed over 10% of total annual recurring revenue. Profitability improved. And record net income of 61 million. Customer base expansion was notable with a 48% increase in customer generation over 100K annual recurring revenue. So they had an increase of the customers paying over 100K a year or more, 48% growth in those. Sustained. Okay, cool. Let's go check out the numbers then, what they report. So they beat on revenue, they beat on EPS, and they beat on EBITDA. So it was a triple beat quarter, but the stock still sold down, probably because they're still just really expensive. Like even after this dip, the forward PE is 120. That makes Salesforce look like a steal. If a deal. I think ServiceNow also is struggling kind of. These are all pretty similar software names. But yeah, dang, look at ServiceNow. They just gapped down on earnings too. I wonder. So yeah, still a little expensive on them, but they are. That was a great quarter. It looked like just looking at that, all their numbers right there. So Heartbeam. Okay, let's check this one out. Ticker symbol B. Oh, look at that momentum. Looks like they were like 50 cent bankrupt and now they're $3. I wonder what kind of happened. There's some comments here. Um, hmm. Okay, news. I wonder if again, what's the market cap on this one? Oh, 100 million. So an extremely small market cap. The whole company's worth 100 million. They have no revenue, but it looks like they're expecting in 2 quarters 66,000 of revenue. Yeah, they're losing 5 mil in net income a quarter. You know, when you're worth 100 million, losing 5 million is the same as losing 5% of your company. So that's not great. Hmm. I don't know. An interesting small cap. I don't know if I'd keep the allocation. Yeah, I'd keep that as a super, super small position. Yeah, Mr. Phil, Pfizer reported guidance today, and Pfizer, yeah, like no earnings report. They do like this every year where they give their guidance. This is like their guidance day, and the guidance was not what analysts wanted on Pfizer. But they actually there was some good news though. Let's see here. Pfizer projects revenue of 59 to 62 billion and plans cost cutting measures. So yeah, COVID products revenue are expected to decline by 1.5 billion with a similar impact from a loss of exclusivity on certain products. So look at that. They're losing their patents, their exclusivity for products. That's going to lower margins. That's certainly not a great future outlook. So what did I say? Operational revenue growth, excluding these factors, is expected at 4%. So that's not great. If we look at Pfizer kind of on the monthly chart here, bad news. Pfizer is the same price that it was in 1998. So if you bought the stock in 1998, it's the same price that it is today. Yeah, and ServiceNow is the most high quality, I think, software name, even though they are still really expensive. Do you day trade or swing trade? I don't really do either of those. Sometimes I'll swing trade, but I mainly just diamond hand. I'm a dividend investor. I just collect the dividends on all these stocks every quarter. So actually, every stock in this portfolio pays a dividend except for Amazon. Amazon's the one exception because I still want to own them. Every stock in that portfolio pays a dividend except Amazon, and every stock in here pays a dividend as well. If you look at the top, it's called our dividend-only portfolio. These are all like dividend growth names, obviously, but yeah, the dividends raise every year faster than inflation. In 10, 20 years, I can't wait to see what my dividend income is just with these kind of names. All right. Oracle, NTRA, ADPT. Hey, ADPT, they have a collab with Pfizer. Hey, remind me to get to them. Why is everything falling? I know, right? At least we get to maybe buy the dip on them. So Oracle, hey, they're green on the day. That's good news, at least. Because Oracle has been struggling. So let's see what this says. Oracle provider or healthcare providers adopt Oracle Cloud and AI solutions. Oracle fiscal second quarter. Okay, so execution risk tied to a major contract like its 300 billion OpenAI deal. That's a crazy freaking deal. Okay, so let's see. Concerns have emerged over its 50 billion AI data center investment, rising debt, and execution risk tied to major contracts like 300 billion OpenAI deal. What we just saw is, this is crazy. You ready? OpenAI, again, Oracle is just a cloud provider. AWS is number one market share, then Microsoft Azure, then Google Cloud, then it's Oracle. OpenAI just gave AWS, the number one cloud service provider, a $30 billion deal. And that was way after announcing the $300 billion deal with Oracle. So maybe that money is going to other companies that can execute it faster because Oracle said there's a slowdown or they can't build these data centers fast enough or whatever. Wow. Oracle secures $150 billion in data center lease commitments. That's crazy. To be recognized over the next 5 years. So let's go look at the forward PE. The forward PE on Oracle is a 35. And the current PE is a 35.45. So the forward PE is higher. So the net income is actually or the EPS is expected to fall the next year. And that's actually because of a one-time adjustment. It says this quarter they made 6.14 billion. They didn't actually. They really made around 3.5 billion, which was still a record quarter for them. But the EPS was was overinflated by double this quarter. We can see that on the analyst expectations as well. They were expecting $1.17. They did $2.10. Wasn't real, but they missed on their EBITDA or their EBIT, and they missed on revenue and EBIT. So there's just a lot of risk around this name, but the 35 PE might be appropriate. Maybe even, I don't know. It's just an interesting cloud name. My cloud exposure is via AWS and Google Cloud, which are huge. Actually, the day that Amazon got the 30 billion AWS deal was the day it hit an all-time high at 258, and it's just been down ever since. Just like Oracle. Notice, not actually, I wonder if we could compare it, but Amazon and Oracle have both fallen pretty similarly. And Amazon's not a pure cloud play, obviously, but has a higher market share. Amazon invests in Whole Foods waste recycling technology. Hey, for Whole Foods market, that's cool. Um, Plans to scrap chicken feed, reduce waste by up to 80%. Amazon partner. Okay, so anyway, Amazon is a phenomenal never sell. I call it pretty much ETF. I'm down 50% on quantum. Should I DCA or just sell it? So it's a tough one because it might momentum, like qubits right here. This is a stock I never own, but like let's say you sold it, it might momentum higher, but this is the stock like you don't want to own it all. You want to sell, like in the long run, this is probably gonna fall like 80%. Like it's tough to hold it now, but yeah, a lot of these quantum names are really junky, and at the end of the day, you do want to get out of it. So on any rally you can, try and get out of these, or I would DCA out of them. Don't sell all your shares today. Maybe sell 10% of some of the quantum. It depends on what quantum stock. Like Google, great quantum name, obviously not a pure quantum one, but some of these other like qubits, RGTI are really bad, sadly. So let's see here. Do you buy leaps? No. Well, I haven't done a single option contract in over a year. Let's see here. Check out IAU. Yeah, actually, here's a cool little life hack. A lot of people know IAU. It's just the literal commodity of gold publicly traded. But then there's IAUM, also run by BlackRock. It's the exact same ETF. You know what? We'll even pull up the two prices next to each other. It's going to look like it's just one chart because they move identically because they're the same ETF. So I kid you not, this is IAUM. And check out the expense ratio fee. It's a 0.09. When on IAU, it has a 0.3. So you're saving for every $100 or $1,000 you put in, you're saving $29 a year. So not too shabby by picking IAUM over IAU. And again, both of these are just literally the commodity of gold in an ETF. And it's almost always a better scenario to buy the ETF of gold over physical gold. I know some people like the physical gold unless the electricity grid goes down, this ETF will, but to get your liquidity. But whenever you buy physical gold, especially in smaller quantities, you're paying that spot fee when you buy it and sell it. And if you buy a lot of it, you got to pay for storage. And the expense ratio fee on IAUM and these IAU ETFs are way lower than what it would actually cost to buy physical gold, especially when you include the fees you pay when you buy and sell it at like a pawn shop or whatever. So, our gold shop. Hey, what up, Logan in Ghana? What's up? What do you think about Tesla after it's run up? I'm thinking about starting a little swing short-term position. I don't like Tesla is ridiculously overvalued, and it's almost pretty much at an all-time high. I want Tesla to do great because it props up so many other names and momentum names, but Tesla is nowhere near a realistic valuation. Like it is the most expensive stock pretty much in the stock market. But it has a high PE, and it's okay to have a high PE if you have a lot of growth, but I don't see the growth there. And just even on the own, like 2028 and 2029 Wall Street expectations, like they're expecting like $300 of this stock price is coming from robotaxi and robotics, and I just can't believe it. Like, and they're like, look at these year-over-year increases, like 11%, but last quarter was down 11, then down 9, and like this is real too. So the revenue grew 11.5%, the sales are up 11%, but the net income fell 36, and it really did fall 32%. So their margins are actually being crushed. Lowest net margin ever. So it's tough to pay that multiple on Tesla, but but the fundamentals in Tesla, it don't matter. No one, it has a mind of its own. Tesla's a mind of its own, not a stock I consider holding shares of in diamond handing. But, and if you have diamond handed Tesla shares, you've done very well. Have you seen Fubo TV stock? I have not. I wonder how they're doing. The upside is limited on Fubo. Yeah, it's actually done bad. And even if the upside is limited because they've already got the Disney money. Disney owns 80% of this company. All like Disney, they could completely end it, like terminate this company, like and rebrand it to whatever. So, but between Fubo, like, and if they never got the Disney deal, I fear the stock would even be it would be almost bankrupt, I think, because of how much they dilute you and lose. But they're losing the sales, are actually down negative year over year, negative 2.3, negative 2.3. They're still losing money every quarter, but actually good news, the losses are narrowing. Actually, I remember when it was like really bad. But actually, this is great that the losses are narrowing at this rate. This was their kind of Disney money right here. Again, they've never made EPS or net income. They just got the Disney money. So it's not a good sign. Not one I'd own, to be honest. And my side of the bet is just Disney. Fubo is a streaming service kind of thing. So yeah, we got 13 shares of Disney. Actually, Disney's done surprisingly good for how boring it is. We have been kind of trimming a little bit, but yeah, hey, Disney, just announced a dividend too. Actually, they had a nice little dividend raise. So you get a 1.3% dividend, 18 PE. Bad news, look at Disney. Disney's the same price that it was a decade ago. Yeah, Disney's the same price that it was in 2015. Yikes. Actually, I wonder if we can go see the dividend history here. Dividends receivable. Is that from Disney? Here, let's see what I got. Dividends receivable. Oh, Clear Secure and Molson. Those are my pending dividends. If anyone likes to see that. So anyway, that's our Webull account there. Let's see here. What are your thoughts on the currency that will last the longest? I wouldn't consider Bitcoin a currency because a country can never adopt Bitcoin as their main currency. You want to know why? Because when there's deflation, and this is the best part about America, whenever there's deflation, it literally gives the country the ability to print money, and they should be. It literally makes them able to print money out of thin air and stimulate the crap out of the economy. And you don't really get. That's why Bitcoin, it's not really going to be used as a currency or like for transactional and stuff, but probably it's tough. Stocks, stocks, but that's your hedge to the dollar and all these currencies losing value every year. Is your hedge is stocks? That's what I think. Because you lose a couple percent to inflation every year. If you just keep your cash always at the same, it doesn't work for you. But if you keep it in the S&P, like the stocks are not get rich quick. It should never be viewed as that, especially like when you add inflation to it. But like the goal is to just buy and diamond hand the S&P 500. You want to get 8 to 10% of your money back a year. And that's what historically the stocks give you, 10% of your money back a year. Then you snowball it. So the goal is to turn $100 into 110, but compound it. So then 110 turns to 123, then 123 to 150. And it just kind of snowballs higher each year. So it's kind of like get rich slow. Compound that, Hey, okay, let's see here. Do you own Bitcoin? I actually do not own Bitcoin, but I kind of own the picks and shovels version of Bitcoin. I own Robinhood. I own Webull. I own Futu. I own SoFi. I own Dave. I own these fintechs that are making hecka margins whenever you go buy and sell a crypto transaction fee. So for the longest time, Bitcoin actually traded exactly like Robinhood stock did, but Robinhood stock added in this prediction market stuff and subscription stuff where it's actually making them way more money. So now they're doing even better than Bitcoin when Bitcoin does it. So anyway, I kind of own Webull, Futu, Webull, Robinhood. Oh wait, why did it censor ADP tier? Well, I'm not sure there. Wait, did we look at that one? Hey, MC, are you still here? Let me know if you want me to look at ADPT. We'll check that one out. Okay. Ooh, let's see. I wanted to get to that one. Well, let's see this. Wow, Webull stock, actually, I kind of just gave my little bull case on Webull here. It's the Webull, that stock, ticker symbol bull, is this brokerage, this fintech app, publicly traded. And I like them because they added in the prediction market and crypto and money, the advisors and a subscription where you can I don't pay for this, but But they have this thing where you can pay them money, and whenever you do that, that'll make the stock a lot of money. And so I did decide to buy some of their stock in my Roth IRA. Now, their stock is really expensive. It's more expensive than Robinhood. It's 5 times more expensive than Futu, the brokerage publicly traded. But I'm more bullish than the analysts are, and that's why I think it's worth owning just a super small amount of this stock. You don't want to have this as a major size position, but I got this one. Still here, IDKY. I don't think it is censored. I wonder what you're looking at there. I wonder what you mean by censored. I wonder what that means. So anyway, I actually bought some Webull yesterday. So there you go. Why did you not buy copper? Or why you don't buy copper X? Let's check it out. COPX, he said. Global X Copper Mining Companies ETF. So wow, look at that. The commodity of copper is pretty much at an all-time high. If you just look at any precious metal, I think maybe silver and gold have done a little bit better, but all the precious metals have had an insane nice little rally this past year. But fun fact, did you know if you owned all the copper in the world and all the silver in the world, let's say you owned all of it, it would still be a market cap worth less than Google. The markets on these are just small, but in the upside, this will not outperform the S&P 500 in the long run, but it's done great this past years because there's so much like safe haven money going into these precious metals, and other like the BRICS currencies are using precious metals to back the currency. So and stuff like that. So they've done great. Um, ooh, what's your thoughts on CNQ? What's that one? CNQ, Canadian Natural Resources. The other one was Canadian Natural Resources Ltd. Okay, well, here is the stock right here. Obviously a Canadian company, so we'll convert the currency from CAD to USD, and Waste Management or AutoZone. Hey, we'll check that one out too. So oil sands mining and upgrading, exploration and production probably is down, probably just because of the price of oil and gas. But look, the sales are up 3.3%, so that's good. And they make great net income. Maybe this was a one-time adjustment. Well, the operating profit did fall 62%. So did they like buy something? Well, they're investing a lot into the future. That's great news. They're investing like $1 to $2 billion a quarter, so that should sustain future growth. But what's the dividend yield here? A 5.3% dividend based off the last full year, the 70% payout ratio, raise the dividend every year. So nice. Looks like a nice little Canadian resource play. Actually, it looks kind of like an Exxon Mobil in terms of stock price. So I don't know if this will outperform the market in the long run, but this looks like a Canadian oil and gas stock. Let's actually pull up the price of Exxon next to it. It should almost look identical. That'd actually be interesting to see. It looks just like Exxon Mobil, matter of fact. XOM, here we go. Exxon Mobil, just to see. Yeah, look at that. And actually CNQ has done a little better. So there you go. Like your Canadian oil and gas play. So, Kleb said Coca-Cola Consolidated. Hey, now that's a stock I own here in my Moomoo portfolio. This is called our buy and never sell account at the top here. And this is a stock I'm never selling. This is not the normal Coca-Cola company. Maybe you were asking about that, but you said it in all caps. So I think you're talking about this company. But this is the Coca-Cola bottler. They bought it like 50 years ago, they bought the permanent affiliate rights to the Coca-Cola brand, so they can bottle their own Coca-Cola products and just sell it wherever they want. And one of the fascinating things is the share buybacks. You aren't going to believe this. They bought back 22% of all the shares that exist at $127 a share. Just on this day right here. This day they announced they bought back literally 22% of all the shares that exist at $127 a share. So that just makes the stock go up more in the future. That's going to permanently make the EPS go up by 22%. It's going to make the dividend cost 22% less, gives you more ownership in the company. So that just is huge tailwind to the stock price. But this is just a bottler of Coca-Cola beverages. One of the best things has just been the bottom line growth. Like check out the annual profit here. If we go to before COVID, this business, 2016, 2017 was lucky to make, 100 mil a quarter. 2018 was terrible, 100 mil a quarter. But look at it now. Nearly $1 billion. The margin expansion here has been the most impressive part because the top, here's the top line sales growth. And sorry, my Wi-Fi is just slow right now. I want to pull up these annual numbers, but maybe the Wi-Fi just won't allow it. Really? It only wants to load the Okay, there we go. So look at the sales growth. It's been kind of slow, 3.6, 7, 11, 10. But it's really the bottom line, the net income, the net margin expansion is why this stock has done so well. And the valuation is fair. They're even right now, not even including the share buybacks, because this is going to go down by 22% after the buybacks go through, but they're trading at a 23 PE. And again, in next quarter, it's going to go just down to 20 because the buybacks. Cool little name there. It's a very different stock than your normal one because they don't do earnings calls. The CEO owns 70% of the voting rights. So he does whatever he wants with the company. I've actually met him. I've shaken his hand. I met him at a Billy Graham Cove conference. He gave a whole hour, 30-minute presentation. It wasn't even about his company. Well, it kind of was. I listened to the whole thing. I shook his hand after. He's a great guy. He's actually, he keeps the values Christian here. Like in all of their bottling factories, they have like a priest or no, not a. Anyway, I just like this company. Great one to buy and never sell. Just good fundamentals too. Good PE. Have you heard about any companies recycling or disposing of solar panel batteries? Yeah, actually, that would be Clean Harbors. I read, and then I got to get to waste management. But Clean Harbors, one of the things, bull case here is they've already done phenomenal. Wow. They said like, and I think this is an old number I read like 2 years ago. It's probably lower than this, but they said to recycle and throw away a Tesla car battery, to just throw it away and dispose of it, it cost over $1,000 just to throw the thing away because of the stuff in it. So anyway, Clean Harbors is one that I like as a play for that. They also just clean up the environment. So that's an interesting stock for you. Maybe you'll like. Okay, let me get to another kind of recycling company, Waste Management, a great company to buy and never sell. I just made a TikTok about this one. Anyone see my most recent TikTok or YouTube short, I think? But yeah, Waste Management, one of the safest never sell names. And just every year, if we kind of zoom out on the weekly chart, like every year, this company has just had phenomenal returns. And it's kind of seen as AI proof. AI can't really hurt Waste Management. And if anything, it'll benefit Waste Management. They're already a shared oligopoly, like 50% market share, then it's Republic Services. But yeah, you get a 1.5% dividend, and they raise the dividend every year faster than inflation. And yeah, we can see where the revenue comes from. It's all from the U.S. or 95% U.S., East tier, West tier. And they own a bunch of, actually, you wouldn't believe the value of their landfills, the value of those real estate assets. I was reading about that too. But yeah, they print a couple $100 million in net income every single quarter. They had a little one-time adjustment from their acquisition of this. They bought this like healthcare disposal business, and that business, specifically the healthcare disposal industry, is supposed to like CAGR at 30% through 2030. So $3 billion buyback, 14.5% dividend hike. Waste Management just turned up the heat on 2026 payouts. But yeah, just a shareholder-friendly company that should give you around 7% of your money back a year. Keep up with the S&P, I think. So yeah, there's your Waste Management. Bill Gates loves it. Actually, check this out. If you go to the largest shareholders, Bill and Melinda Gates Foundation, basically Bill Gates owns 7.2% of the whole company, that whole $100 billion or $200 billion company. Okay. So yeah, someone said C3 AI. What company would you use a put option on? Well, I don't really like to buy puts, but a company I'm bearish on, I don't know. Maybe you see, it's hard to bet against some of these names, like a Tesla or like an Oklo. Like Oklo is like a zero. But it's hard to, it's like it'll have that, like the day you short it is when it'll have some random news and it'll pop up 10%. But in the long run, you'd want to buy like a 1-year output or something. Anyway, okay. COKE is a beast. Know what else is a beast? Bombardier. Hey, what up, my music? All right. C3 AI. I think that's some like AI kind of, they have literally the ticker symbol AI. So, guess they got a nice little ticker symbol there. But unfortunately, AI, the ticker, is at an all-time low, or the same price that it was in 2022. That doesn't happen unless you have bad financials. And let's go investigate. Let's go look at their numbers and see what the heck happened here. So they have a subscription revenue business model. So subscriptions are 93% of the revenue. Well, let me actually just look at the revenue because that number looks choppy. So the revenue, sales are down 20% year over year. So maybe they're losing subscribers or something. So revenue's down 20. Last quarter it was also down 20. And yeah, they're losing $100 million net income a quarter. So that's not a position you want to be in. Your sales declined 20% year over year. You're losing over $100 million net income a quarter. At least you have a good balance sheet. Are they diluting you though? We'll wait for that to load, but they have a great balance sheet though. Let's see how much cash they have exactly. So they have $675 million of cash. So if they lose $100 million a quarter, I guess they got they got over 1 to 2 years of cash left. So very slight dilution, actually not that bad. Anyway, at least they have 600 mil of cash, but this is not the position you want to be in. Declining sales, losing 100 mil a quarter. I can now see why that one's kind of at all-time lows. All right. Yeah, zero for Aqua. What up, JVM? Good to see you. Would DGC bringing back coal mines? Do you think that will bring income on coal? What's that one coal play? It's like, it's not SMR, but it's like EMR. I don't remember the ticker symbol. There's some sort of coal play. But yeah, I'd rather invest in nuclear or something like that. What do you know about ETF for retirement plan? I'd buy the S&P 500 for just like, well, if you're 10 years away from retirement, I would buy the S&P 500. Well, if you're looking for maybe a bit of higher income, maybe like an SCHD, something like that. If I want to understand what I'm looking at, where do I start? Or hey, we're just looking at stocks here, or we're really just analyzing individual comps to buy. But yeah, if you want to start investing, you got to get a brokerage. My favorite brokerage is there's many brokerages. Actually, all three of these apps are all these are all brokerages. They're all in the link tree in my bio. Oh, my screen just actually disconnected there, so I just realized the screen's frozen. So let me fix that real quick. That's not good. Someone said there's so many fakes accounting you. Yeah, that's the thing. Please watch out for people impersonating me. I sell absolutely nothing. I do have those affiliate links, but I have no course book. I don't coach. So there's no real way to learn from me except watch the streams, watch my YouTube videos. But yeah, there we go. There it goes. So yeah, if you want to get a brokerage, buy stocks, I'd recommend this brokerage right here. It's the very first link in the link tree in my bio. It's called Moomoo. Robin, it's the second link in the link tree in my bio if you wanted this one. Like, this one's good, super simple, but you can't really fully analyze a company on there. And they make you pay $5 a month if you want like the yields and stuff. Well, this one doesn't make you pay anything. Completely free brokerage, no commissions at all. You get the 3.35% APY on your idle cash too. And it has a lot of cool analysis tools. So let's look at some more here. Yeah, just know I'll never DM you or follow you, nothing like that. Want to check Fate, maybe one of my favorite long-term plays. Oh, let's check it out. Hey, what up? No way, Shark and Water. He says, there's a risky biofarm stock that's about to get FDA approval. Hey, we'll check that one out after this. Ooh, Comcast 2, Dylan, what's up, y'all? So here's Fate Therapeutics, a very small name. They're only worth 127 mil. So that's a very small market cap, and they're at an all-time low. Actually, dang, yeah, the stock is lower than it was in 2016. So this stock really is at like a legit all-time low today. Let's see. So they're worth 126 million. Let's see if that's fair. Or they have sales. So they do have revenue, but that's terrible. Look at this. So they did 1.7 million of revenue, pretty much nothing. But the analysts are expecting the revenue to fall to 800K. So the revenue is supposed to fall. Oh, hey, so remember, the whole company was worth like 100 mil. They lost 32 mil, which is over 30% of the company. Or they were worth 120 million. They lost 30 mil, 35 mil, 37, 52. So they lost over 120 mil in net income. So they've lost more net income than their entire market cap in the past year. Whenever you lose net income, the money has to come from somewhere. So look at the balance sheet. They're not fully bankrupt yet, but at this rate, I mean, they really are, and they have no sales either. So it's a tough one to really trust. I mean, I wouldn't really trust that one, unfortunately. Actually, if I had to pick one, I would pick Cormedics, and I do own this one. It's another small cap. They're worth 900 million. Look at that. Very small market cap, 900 mil. But here's the difference. That one has $1 million revenue a quarter. This one did 100 mil of revenue. They have revenue for the first time ever. They used to not have any revenue. They weren't FDA approved. They just got FDA approval. They have 100 mil of revenue. On that 100 mil of revenue, they netted, I kid you not, they netted 51 mil of that. That's over 5% of the company they made in net income just this quarter. So they literally trade at 5 times net income. They sell this deaf and cath product. There's a lot of risk here, but I like this one a lot more than that other one. And I do own Cormedics, full disclosure. If I pull up my Robinhood Roth IRA right here, hey, they're actually slightly green on the day. Not too shabby, but yeah, we're up 2.75. Again, as much as I love this stock, I would not own this one with a meaningful amount of money. Here's another kind of one we'll check out. OTLK. Outlook Therapeutics. Then we'll check out Comcast. So he said that FDA approval at New Year's time. So yeah, that's really, I guess, the catalyst you'd look forward to. Yeah, very small name. Another one that's worth 107 million. So they're worth 107 million. And since they're not FDA approved, I assume they have no revenue, or it looks like they did have revenue this quarter. Look, 1.5 million. Analysts are expecting 1.6, barely a miss, but next quarter they're expecting 5.8 million and 5 million. So that's maybe, if you annualize that next quarter number, that's 20 mil of revenue a year. The whole company's worth 107 mil, but I'm assuming, yeah. So sadly, they're losing 15 mil. So when the whole company's worth 107 million, losing 15 mil is basically losing 15% of your whole company. The quarter before, they lost 12 million, and they're highly leveraged. Yeah. Like, how are they going to pay off this debt? They can't. So that's why this stock is pretty much at all-time lows, only worth 100 mil. And I almost wouldn't want to take the risk on this. I wouldn't really take the risk on this one either. That's a lot of liabilities. That's rough. Like, usually, that's why we always look at the financials. The financials always explains why a stock is either at an all-time low, or it's like Palantir or an AppLovin at all-time highs. Have you used Vanguard? Also, you're very informative. Hey, I appreciate that, Don. I actually have not used Vanguard, their brokerage. But I'm sure it's actually, they probably don't have as much features as these apps do. But here's Comcast right here. Comcast, yeah, wow. Look at that. They're up 4.7% on the day. It looks like, reading this top article here, Comcast spinoff debuts at modest valuation, Well, anyway, the reason Comcast, it's still done terrible, sadly. If we zoom out on Comcast here on the weekly, Comcast, kind of like Disney, is the same price that it was in 2015. Actually looks very close to Disney, where Disney is also the exact same price that it was in 2015, because their normal TV cable business is, residential connectivity cable. This is a slow bleed to zero. It's still a lot of money, but as we can see, this business is just declines every quarter. But it's the other part of the businesses that they're heavily investing in, like Universal Studios, the theme parks. Oh, they also own Universal Studios, like the actual studio, like they own so many movies and franchises, like the Despicable Me. Like, they own Despicable Me. So yeah, here's their studio business. But yeah, they're trying to, like, how's their theme parks doing? Theme parks, that's up 18% year over year. How's that on an annual basis? Oh wow, that actually went up. Okay. Anywho, what I love is the share buybacks. Oh yeah, so look at the sales, the lifeblood, the revenue of the company is down 2.7% year over year. That kind of explains why the PE ratio is like a 10. So the revenue's down 2.7, and the net income, the profits fell by 5, but they're still making on average 3 to 4 billion in net income a quarter. And what is Comcast doing with 3 to 4 billion in net income a quarter? Well, they pay a dividend, and that dividend only cost 1.22 billion. So there you go. There's Comcast. It's that residential cable business is lagging on the company. Day 7 of asking for PayPal. Hey, we'll get to PayPal. I haven't seen PayPal any time this stream, but we will check out PayPal in a minute here. Sadly, PayPal is like the same price that it was in 2017. Chrometics will take it 3 months when another pharma company makes the same compound and cheaper. Yo, Connor, no one can actually make DefenCath, but their patent does expire in 2032. But actually, Connor, DefenCath is the only FDA-approved catheter. So actually check out DefenCath if you're interested in them. Or Chrometics right there. Yeah, it's risky, but they have a good promising. Oh, hey, what up, MC? Symbiotic. Yo, Symbiotic. This is one of my favorite robotics plays. So, let's see here. Oh, yeah, debating on grabbing more MP materials. We'll check out MP materials, and you can have FCF and negative EPS. Yeah. So you can have positive free cash flow, because free cash flow does not include the stock-based comp and non-cash expenses like the GAAP net income does. Anyway, here's Symbiotic. This is a warehouse robotics company. This is my second favorite robotics name behind Amazon. So they're actually helping out Walmart with their warehouse robotics and logistics. And Walmart loves them so much that, check this out, Walmart owns 12.5% of the entire company. So Walmart's a big shareholder. They want to see them do good. Walmart's the largest customer as well. And this one has real growth, real revenue. They have over 1,500 registered IP and patents. So I really like Symbiotic, way more. There's a lot of trash robotics names, like a Rich Tech Robotics has no IP, no nothing. But this is my favorite one, right behind Amazon, because it's the companies like Walmart and Amazon that are, let's say they don't even make their own robotics, they're the most to benefit from it. And Amazon is doing their own robotics. So anyway, I love Amazon. Walmart's pretty much at an all-time high too. All right, let's see here. PayPal. Let's do PayPal real quickly. So actually, a quick, before we look at that, let's check out XYZ. This is their biggest competitor. So when we're looking at PayPal, PayPal stock is terrible, but it's kind of the whole industry. Look at Block. Block owns Cash App. So Block stock is the same price that it was in 2018, and they've paid no dividends. Same with PayPal. So Block is the company here. I'll show you this. 62% of the revenue is Cash App. PayPal is the one that owns Venmo. They pretty much are like that same company, and they've also done terrible. If we look at PayPal, PayPal is the same price that it was in 2017. And actually, I was going to say they paid no dividends, but they just paid a dividend for the first time ever about 2 weeks ago. So they have around a 0.9% yield, around a 13% payout ratio. We were doing the math on that earlier. So yeah, they're kind of they're trading at this PE ratio where they're not really expected to create or lose you any value. I love all the, sadly, this is like the fintech I wouldn't really buy. I'd buy like a Robinhood, a Webull, a Futu, a SoFi, a Dave. I wouldn't really buy the Cash Apps and the Venmos. Because those are actually money. They're not really making money on Venmo right now. They're still looking to monetize that. But anyway, they are still printing money, though. This is one of my favorite parts about PayPal. If we look at this is their net income. They're easily really making over $1 billion of net income a quarter. So they're making over $1 billion in net income a quarter. What are they doing with all that? Well, this is the crazy part. Look at the top here. They are spending over $1 billion on buying back their own shares at this price. And that's what I love, that they're doing buybacks at this price. And here's what those share buybacks do for you. The net income grew by 23.5%. Net income's up by 23.5%, and the net income per share is up by 31. Again, that EPS growth rate and the net income growth rate should always be the exact same, but since there's way less shares that exist, that makes the EPS go up higher, which makes the PE ratio go lower, which gives you more ownership in the company, makes the dividend cost less. So I like those buybacks that they're doing, but I almost wish they would spend that. They spent like $5 to $6 billion on buybacks this year. Imagine $5 to $6 billion like buying a new company or buying a new asset, like Honey or anyway. PayPal's interesting. I don't know if it'll keep up with the S&P 500 though. Oh, and actually, great point here. Someone says PayPal applied for a banking license today, or banking charter today. Yeah, check this out right here. If we go to the bottom, PayPal submits application to establish Utah chartered PayPal Bank. Wow. Aims to enhance small business lending, offer interest-bearing savings account, reduce reliance on third parties. So maybe that'll boost their margins. That process is always let's see what else is here. Any other news? YouTube partners with PayPal for stablecoin payouts to US creators. Whoa. YouTube has partnered with PayPal to enable US-based content creator to receive earnings in PayPal's stablecoin, PYUSD. So that's interesting because YouTube, maybe TikTok will do that too, where TikTok will, the only way to get paid on TikTok right now is via PayPal, and maybe they'll incorporate, that too or something. Anyway, PayPal almost getting into like a circle territory. I do actually like that. It's really cool, actually. Hey, what up? Yeah, hey, try not to spam there. We'll try to get to all these stocks here. Yeah, and yeah, hey, and why? Same with XYZ. We looked at PayPal stock, and yeah, Block is also done not too well. Same price as they were in 2018, but they still make good. Like, remember, PayPal was making over $1 billion in net income a quarter. XY, oh my goodness, this does not want to load. They also make, well, not the same, but they still make a couple $100 million in net income a quarter. They like print a lot of money, but they're just low valuation. I don't know. What is ELE? ELE, Elemental Royalty. Okay, so let's see. This stock is the same price that it was. Oh, they just IPO'd. Okay. They're a very small name. They're worth $900 million. Are they like an oil pipeline? That's what normally these royalty companies are. But let's see here. Precious metal royalties, acquiring uncapped royalties and streams. So yeah, they're worth $900 million. Let's go see. Obviously, the margin should be high. Well, that's not as high as I thought because real royalty companies. Okay, well, look at this. So if we go to the revenue right here, the revenue was $6.8 million. Out of that $6.8 million of revenue, they netted $1.4 million. Yeah, they really did. So fortress balance sheet. Look at that. If I had to pick actually, you'll love this one. If you like that stock, you will love Royal Gold. This is another pure royalty play, but it's much larger. Check this one out. An $18 billion market cap, a 22 forward PE, even at all-time highs. Look at that stock price. And that stock price doesn't even include the dividends. The chart looks even better. But yeah, they also make hecka royalties. Like here's their royalty interest. It's up 41% year over year. They have much higher like margins. Yeah, gross margins of 73, net margins of 60. That other company had like 30% net margins. Anyway, here's another kind of royalty name for you. Oh, did they just like acquire an asset? Yeah, look at that. So they spent $1 billion, had to issue only $750 million of debt because they have so much cash in hand, but they just bought an asset. That's why their assets just went up by over $1 billion. Anyway, that's RGLD for you. Probably a safer play than ELE, but interesting one there. You got nice returns on your Moomoo highlights. Hey, did you see that? Yeah, hey. Actually, we're doing pretty good year to date. This is our buy and hold portfolio. We're up 79% year to date. We were doing just as bad as the market was during the tariff stuff. We were down 16. The S&P 500 was down 15, so we were doing worse than the market. But now we're actually doing better than the market because we actually bought the dip during the dip. Look at this. So we bought all of our position of Comfort Systems on that dip this year, January through April. We bought all of our shares of this company. That's led to most of our year-to-date gains because we didn't own that one before this year. Same with Amphenol. We bought this one also during the dip down here, and we're up doubled on that one. So, and I haven't trimmed these ones either. I'm not going to. It's our diamond ham portfolio. Okay. Do you own any Bitcoin or Leaf stocks? No, I actually do not, Mr. Phil. But they have been pumping today. They have been pumping. Let's see. I've got MYNZ, and then Figs. Oh, Figs. We'll check out Figs too. I think that's one of those banks, or maybe it's an insurance company. Ooh, so actually, we're not going to cover this name. If you look at this company, if the top right, they're only worth $8 million. I mean, maybe there's someone in here who could buy this whole company, but yeah, maybe if we'll all pitch it a little, okay? Well, but no, for real, this stock is at all-time lows. Probably wouldn't want to buy them. Let's go figure out why. So remember, just kind of think about this logically, just pure logic here. Keep it simple. Let's say you buy the company and you could for $8.7 million. So you buy this company, this asset for $8.7 million. You're buying a business that lost you $5 million, $6 million. Well, do they have revenue? I mean, I wouldn't touch that one. I'd pretty much bankrupt. Yeah. Yeah, I wouldn't touch that one. Let's check out Figs real quick. Figs, and then Nebius. What up, Sebastian? Coin. I still don't know how to place trades. On digital currency. Oh wait, Coinbase. There should be like a YouTube video for that. Yeah, you can do crypto on here. So here's Figs. Let's see what this. They've had a great year. Look at that. The stock went from $5.90 to $11.90. That's an incredible little year that they've had. So wait, scrubwear. I'm thinking of a whole different kind of industry here. So they're in scrubwear. What does that mean? So apparel. Let's go look at their website then. What the? So they sell is it like real or is it off-white? Is it like a fake jacket stuff or I mean, fake hospital clothes or like real hospital clothes? I mean, is it like to look like a nurse or I don't know? There you go. Figs owns a nonprofit. Okay. Well, there you go. If you want exposure to hospital clothing, there you go. Ticker symbol Figs. The apparel industry is kind of struggling. Well, let's go look at their numbers. How much are they selling of this clothing stuff? So revenue this quarter, let's see. Wow, $151 million in revenue. $151 million in revenue, and they actually netted. After paying $1 million plus of taxes, they made $8.75 million in net income. And they have a good balance sheet. That's actually surprising for an apparel company. Really good balance sheet, making net income. Again, before today, the numbers looked really choppy, but maybe they're getting more consistently profitable now. Free cash flow. Let's see. Actually, they beat on expectations. That's kind of the orange line here. Yeah, they beat on revenue. They beat on EPS by crazy, which is net income. And they beat on EBITDA, so they triple beat on every metric. That's pretty interesting. So, yeah, scrubwear, non-scrubwear. Interesting little name here. Market, 85% of the revenue comes from the U.S. Well, there you go. There's your Figs apparel play. I think Lululemon has done pretty good. It's real. There you go. Dylan said LDOS. Yeah, hey, that one was interesting there. What do you think of Griffin? Ooh, Griffin. That's a cool one. Are stocks in international market or does it only apply in the U? Wait. No, yeah, you can buy any international, or I can buy on this platform any stock. On any exchanges like Canadian stocks, Chinese. Okay, well, anyway, here's Leidos, a $23 billion company. The forward PE is a 16. So, that's a cheap multiple. That might imply the stock is just going to continue to climb higher. The PE ratio of like the S&P is like a 24 when you combine all the average multiples. But Yo, my Wi-Fi is just slow today. Hey, by the way, if you wanted to follow button, we stream every day. Dang, we've been live for 2 hours now. Dang, time has just been flying. We stream every single day if you wanted to follow button. I sell absolutely nothing. I have no course, book. I don't coach. Literally sell nothing. All I have is a YouTube channel and TikTok. So if you wanted to follow button, I appreciate that. Yeah, NCLH. Yo, Dave, man, my bad there. I want to check that one out. So this company, LDOS right here, is in National Security and Digital. Well, that revenue just hit 2 billion for the first time ever. Health and Civil Defense Systems, that's up 11%. So let's go check this out. Big beat on revenue. Analysts, that's kind of the orange line there, what the analysts expect. They beat on revenue, they beat on EPS, and they beat on EBITDA by a huge margin. So no wonder they're gapping up on earnings every time. These are great numbers. Yeah, check out the bottom line. They're easily making 350 to 400 mil in net income after, they're paying 100 to 200 mil of taxes a quarter. So they really do trade at like a 17 PE. Maybe the PE is because the sales growth is slow. Like the top line is mid to low single digits, 6.6, 2.9, 6. So maybe that single digit growth is why the PE ratio is what it is. But that's a big beat on expectations. Actually, analysts were only expecting like 2% growth, but they did 6%. Anywho, they have a dividend. 0.8% dividend, safe payout ratio. I like how diversified that they are. Oh yeah, let's get to this one. NCHL right here. Do you still hold Nebius? Well, actually, I've never owned Nebius stock. Wait, NCLH, is that the cruise line? Norwegian Cruises. So the truth is, I don't love the cruise lines or the airlines because look, after COVID, they just got smoked and they still have never recovered because this year specifically, they lost billions and billions of net income a quarter and it kind of screwed the company forever. Let's actually see net income. How's it recovered? So actually, the net income has recovered nicely. We can kind of see the annual basis. Yeah, look at this. After 2020, they lost 4 billion, 4.5 billion. What's the market cap of this company? 9 billion. So they're worth 9.9 billion. But it looks like they're finally back to making good money. Only took them a while. They're so recession prone. So it's a huge cyclical. It's like a swing trade travel play. There's never a scenario where you'd really want to diamond hand this and expect this to outperform in the long run the S&P 500. There's funds out there that buy the S&P 500 but remove or make their own, but they remove the airlines and the cruise lines because they all just do terrible. So now it's a trade. It's not one I'd consistently expect to outperform the S&P 500. And it's not just them, like Carnival Cruise Line as well and all the airlines. Like here's Carnival Cruise Line, they're still, look at that. Wow, still down bad. But anywho, those are still possible to make money on those. Real hospital clothes, but fashionable, like Lulu for hospital. Yeah. All right. So maybe, they sell hospital clothes. Maybe there's some hospitals that exclusively only buy their clothing from that company and they have like certain contracts. That'd be kind of cool. Van Rick said Folk. Is that a stock right there? FOLK. I typed that one in. I can't find that stock there. Check out Lyft. Yeah, we can do Lyft too. This is kind of like, I do think Uber's the better buy. If I had to pick on a dip, Uber or Lyft, I'd pick Uber. So here's Lyft right here. This app is telling me that there's a bearish continuation triangle. That doesn't really matter. But look at Uber as well. I'll pull up both of these. Uber is also on a nasty little decline right here. And Uber trades at a 23 forward PE. The current PE is a 10, but that's artificially low. So next year's net income is a 24. But if we go over to Lyft right here, and Lyft I don't think is going to be as growthy, but they trade at a 34 forward PE. So they're trading more expensive than Uber. And there's a rumor that, it'd be genius for Tesla to buy this company or Tesla stock merge with Lyft. But they have been missing on expectations for the past 3 quarters. They missed on revenue every quarter, but they have been beating on their bottom line. A slight miss on their EBIT, but they beat on EPS. Yeah, they basically just got net income positive for the first time. Maybe you really should do like a 2-year out PE ratio because they just got net income positive. But they used to lose net income every quarter. But now for the past 4 quarters, or if you average it out, they've made net income every quarter for the past 4 quarters. So that's great news. And the free cash flow is great as well, but you don't really look at free cash flow because of all their stock-based comp that it needs to include in GAAP net income. But the GAAP net income is great. It's a little pricey. That's the thing. Like even after this dip, it's still a little expensive. And probably rather buy Uber on the dip just because Uber's safer as well. They own a bunch of Grab. So it's like with Uber, and it's not just Grab as well. You get exposure to a bunch of other companies as well, like just via Uber being the largest shareholder. Like I forget the other names, but there's two other stocks out there that Uber is also the largest shareholder because Uber just prints like billions of cash flow a quarter that they can do that. Um, Next year they're starting an expansion with nurses. Hey, maybe that future sentiment, that's good. All right. Can you go over Broadcom? Yeah, we'll look at a few more here. Then I gotta go. Dang, we've been streaming for well over 2 hours. This has been fun. Oh, let's look at Broadcom right here. So, actually they are up on the day. That's great news. Let's see if there's any kind of news here. Broadcom reports AI revenue growth with margin and concentration risk. Well, all right. Broadcom faces market cap loss amid AI profitability concerns. Um, hmm. Losing 300 billion in market cap. Well, that don't matter. Well, let's just go look at their actual numbers. Wait, let me read this one more time. Broadcom affiliate, an insider sell 400 mil. That doesn't matter. I never care about when insiders sell. Like when Jeff Bezos sell, doesn't matter. But yeah, a lot of people know Broadcom for the semiconductor solutions. And it's been growing phenomenally. For the first time ever, it's over $9 billion, up 26%. But a big growth driver for them as well is their basically VMware infrastructure software business, which doesn't want to load here, but that's 42% of their entire revenue. And this business is booming. Doesn't want to load it though. You know what? Doesn't matter. They beat on, like, here's the orange line what the analysts expect. They beat on revenue. They beat on EPS, which had a slight adjustment, and they beat on EBITDA. They're printing money. Point being, I love Broadcom. I really do. I'd love to own this one, but even after the dip, the 42 PE is expensive. That's an expensive multiple. I'd wait for a bigger dip on Broadcom to really meaningfully buy. PNW said, what app are you using, bro? Oh, hey, yeah, if you're actually, this is a brokerage. If you want to get this app, it's in the link tree in my bio, very first link there. It is an affiliate link, full disclosure. So if you go and like deposit $100, we'll both get some like free stocks there. But yeah, my favorite brokerage, you just type it into Google though, a broker called Moomoo. All right. One or two more here, then we'll get out of here. Yeah, Costco, Costco is kind of, Costco reminds me of Broadcom. It's a great company. But it's too expensive. I think they're both at the same forward PE. Yeah, Costco's at a 42 forward PE. So Broadcom and Costco are priced at the same next year's net income multiple. So that's interesting. Yeah, Costco's like just such a safe business, even if you don't, you have to pay a subscription to get into their store. And even if you don't go to the store, you're still giving them that monthly subscription. And customers love going there because you buy stuff in bulk and you get a good deal. They have the loss leaders like the $1.50 hot dog and rotisserie chicken to get people in the door. Costco's also been growing their gold business, like super small part of the business, but their gold sales have been crazy at Costco. Get a nice dividend, 0.6% dividend. But the valuation is still expensive on Costco. I'd love to own them though. But look at Walmart. You know what's crazy? Look at Walmart. Boring Walmart is like all-time high on Walmart. Ain't that crazy? Costco, they're not investing really into an online presence, into like digital delivery. But I think people enjoy going to Costco in person, or I don't know. Okay. Can you check out Coinbase and Nebius? Let's do Nebius right here because we never got to that one and I saw them a few times. I don't have too much good things to say about Nebius, but I'll show you the good numbers here. So NVIDIA owns them actually. NVIDIA is giving CoreWeave, APLD, Nebius. NVIDIA's taking stakes into these companies, giving them money just so that they'll go spend all that money on NVIDIA chips. So there's like this circular kind of, bubble thesis happening right now where also other things like OpenAI owns 10% of NVIDIA owns 100 billion of OpenAI, and OpenAI owns 10% of AMD. So whenever AMD is going up, NVIDIA is going up, and NVIDIA's giving them money just for them to go buy chips. So let's go look at Nebius's numbers though. So basically, what does Nebius do? They own a bunch of NVIDIA GPUs in a data center, and that's it. And what are GPUs needed for right now? Cloud hosting. So they have crazy deals from like the Microsoft Azure Cloud, where Microsoft gave them $17 billion to host their Azure Cloud on there. And so if we go to their right now revenue, this top line growth is phenomenal. The revenues of 150 million this quarter. The same time last year was 32 million. Insane increase in the revenue. So this was a record 150 million of revenue. And check out what it's expected to be in 2 quarters, 470 million. So A great top line growth expected. I think Nebius is still going to do good for probably the next 2-3 years, but in the long run, they are kind of the bag holders buying these super expensive NVIDIA chips where the depreciation, like in 15 years, the value of the billions they spend on these chips are literally worth $0. Actually, this is probably good news. Jim Cramer is actively short on Nebius. Actually, I guess he's made money because I think it's at like a new 52-week low or multi-month low today. But there is some real risk here like that. But it's I think he's wrong in the short term because the revenue is supposed to jump up to 469 mil. They still lose right now if we go to their profits. They're losing over 100 mil a quarter, well over that. But I guess in 2 quarters, as the top line is going to pretty much 3x, the losses are going to improve. They're only going to lose 66 million. So there's nothing proprietary. Again, at the end of the day, they just own a bunch of GPUs in a data center and they're renting them out because companies like Microsoft and these cloud businesses know they shouldn't spend all this money on NVIDIA chips and they basically rent out capacity for them for lower. Anyway, that's the stream. I hope you guys have a great rest of your day. If you like my perspective, feel free to hit the follow button. We actually stream every single day. And please watch out for people impersonating me. I'll never ever follow you or DM you. And I sell absolutely nothing. I have no course book. I don't coach, literally nothing. So let me give you a quick portfolio update. And if the only way to support me, if you did want to support me, is just hit the follow button and especially subscribe to my YouTube channel. I'm trying to build up my YouTube channel. Specifically, I don't get many viewers on there or views. So if you want to help me out, sub to the YouTube. It's called Nathan Roberts. It's also in the link tree in my bio. But yeah, check this out. This is our Moomoo account. Let me give you a quick portfolio update, then I'll get out of here. This is our buy, never sell portfolio, where once we buy a stock in here, I never sell it. And these are all the stocks that I've chosen to diamond hand. We're up on most of these. We've done insane. And the reason we've done so well, like we're up 79% year to date. All time, we're up 166% versus the S&P. Here, it actually does the cool calculations. Every single one of these blue dots is when I deposit money, and it does the math where if I put that money just in the NASDAQ or the S&P 500, I'd be up 61. So our portfolio has nicely outperformed, and that's because we didn't sell before today. Most people, and I've made a lot of these mistakes in other portfolios, but not in this one, where once you're up double or triple on a stock, you sell most of your position because you take risk off the table. You tripled your money, so why not sell your shares? But in this portfolio, we're not allowed to do that. So we just diamond handed. Like that's all on Powell Industries. We're up 320%. I remember I was one to take profits like up here at 170, like because I literally bought this stock right here, and then within a week, I already doubled my money, and I wanted to take profits, but I never did. So that's our Moomoo portfolio, and here's another example why your biggest regrets might be selling out of great companies like Robinhood right here. One of my biggest regrets is you see, I own 5 shares of Robinhood. We're up a crazy 750%. Sad part is we used to own a lot more. And it made sense to me. This is what I was talking about. I bought the stock at $10, $9, $8. And I sold most of my position, 50 shares at $36. I took a 3x, 3.5x on my money, but that was the dumbest thing I could have done because today I sold it at 36 and now it's 119. So, and sometimes that'll hurt worse than some of your big losers. So yeah, this is our Webull portfolio. There's our all open profit and loss. We're only up 17% all time. I love being fully transparent. I'll share with you my total percent change and everything on all my portfolios. You got any questions for me, let me know. You want to see the dividends or anything. But yeah, here's some of our losers in here. Sprouts Farmers, Progressive, TAP, Iron Mountain's back negative. That's crazy. Our newest position in here is actually Southern Company. It's a bit of a higher yielding name. There's our kind of little buy order on them, but they have a 3.5% dividend yield, 20 PE or 20 forward PE. It's a regulated utility. And then finally, we have our Robinhood portfolio, or actually we have 2 different portfolios in here. We got the Roth IRA. I guess we'll start with this here. We started our Roth IRA pretty much exactly a year ago, and we invested the majority of the money in the past couple months here. But yeah, these are all the stocks that we own in here, and here are our total percent change in every stock. So we're up on every stock except for Webull, or just barely up on HCA Healthcare. But yeah, here is our main account, our dividend-only portfolio where every stock in here pays a dividend. Well, look, the value of this portfolio is 28.4. What's this one? This one's at 28.9. Wow. These portfolios are nearly the same in value. But yeah, this one's up 28, or it's up 17% year to date, and every stock in here pays a dividend. As you can tell, though, most of these are dividend growth companies. Meta, Google, CEG, Carlyle, Found Green. So we're up on every single stock in here now, which is pretty cool. So yeah, that's the portfolio update. Hope you guys have a great rest of your day. The Qs are at a new intraday high. So hey, go check the portfolio. Maybe you're great. Who knows? But you should sell a stock if it gets extremely overvalued. Exactly. Some of these things though, all these stocks are here. Comfort Systems, Powell Industries, Coca-Cola Consolidated, Amphenol are all at fair valuations of the forward PE, and Amazon, like to the point where if I was a new investor and didn't own any of these, I would maybe consider them, nibbling on them even at their current valuations because they're not expensive. Even though I'm up 4x on this stock, I'm up over 4x on this stock, the PE ratio or the forward PE is a 21. Actually, for my PE on cost, or I basically bought this company at 5 times current net income. I bought it at the time at a 20 PE, but the E part of the ratio went up so much. Anywho, I gotta go. Hope you guys have a great rest of your day. If you want to hit the follow button, I really appreciate that. Oh, someone said, what app is that? Uh-oh. Actually, I knocked that over. All these apps are all in the link tree in my bio. Yeah, if you're interested in stocks, want to get stocks, you need a brokerage. And I don't even mind having multiple brokerages. I have all these different brokerages right here. They're all in the link tree in my bio. If I wanted to get one, I'd get this one right here. It's the very first link in the link tree in my bio. It costs absolutely nothing. It has the most useful analysis tools. You even get the APY, 3.35% APY on your idle cash while it's doing nothing, earn a little interest on it, and it has the cool analysis tools. So yeah, if you want to use my affiliate link, it's in the very first link in the link tree in my bio for this app. Weeble's the third, Robinhood's the second link in the link tree in my bio. So yeah, the very first one I'd pick. I don't know what I just clicked there. My paper trade account. Oh yeah, you can paper trade. Yeah, if you want to follow me on the app too, you can like post your move folio and all that. So anyway, yeah, this is my favorite brokerage. It's in the link tree in my bio, very first link there. So see you later. Sorry for all the and please watch out for people impersonating me. I'll never follow you, do me. See you later, Dawn and Music. Y'all are all so nice. Thanks for being here on the YouTube stream. Let me end the TikTok one. So yeah, thank you to everyone on the YouTube stream. I'm trying to put on my YouTube channel, so y'all are the real ones. Yeah, FIX. Oh yeah, so the FIX, the forward PE is what I'm talking about. The 40 PE is a 32. So in a year, the PE will be 32. And that's if they don't beat on expectations. The EPS, they beat usually by a lot. So that's why I wouldn't sell comfort systems. That's certainly why I wouldn't sell comfort systems at this valuation. You're right. It looks expensive. It is expensive. Mostly it's not the best risk reward ever, but it's not like crazy overvalued. Like this can't be the peak. This has so much more upside, I think, like 20, 30%, like the forward PE at 32 for the growth that it has and the margin expansion, I think is very fair. See you guys later. Sorry for dragging y'all here so long.